all of you to today's integrated business solution case study session. You know, IBS is a very dynamic paper at CA final level where you have to integrate your knowledge across the CA final subjects as well as from costing and law area, which is your self-paced modules. Students, here you have to think holistically. Let me begin with a story. Imagine a time when getting a ride meant standing on the roadside, waving at passing taxis, negotiating fares, and often facing uncertainty whether a cab would even stop or not. For decades, the traditional taxi industry dominated urban transportation. Licensed operators controlled the market, fares were often regulated, and the system, though widely used, was not always efficient or customer friendly. Long wait times, lack of transparency in pricing, and inconsistent service quality were very common challenges. Despite these issues, the industry remained largely unchanged and established players felt secure in their position. Now, in one side of this industry, a small new player enters. It didn't own taxi. It didn't follow the traditional business model. Instead, it introduced a simple idea of connecting riders and drivers through a simple mobile app. Initially, it targeted a segment that valued convenience over tradition. People comfortable using smartphones, willing to try something new, looking for a more predictable experience. Industry experts were doubtful. Traditional operators dismissed it. This is not a real competition, they thought. It is not a real competition. This is just a niche service. Therefore, they clearly ignore the company. What we just saw is the seed of what we call low end disruption. Low end disruption happens when a smaller competitor enters the market by serving overlooked or less prioritized customers. Segments that incumbents not focus on. In the beginning, these services may appear limited or unconventional, which is why established players often ignore them. But over the time, disruptor improves its offerings, scales rapidly, expands its reach until one day it redefines. Please note that it redefines the entire industry. And yes, you have guessed it. It is the disruptor in our story is about Uber. Uber didn't start by replacing the entire industry overnight. It began offering a more convenient, tech enabled alternative, real time tracking, transparent pricing, digital payments, and driver ratings. Over time, it expanded into multiple segments, improved service quality, and scaled globally. By the time traditional players recognized the shift, the rules of the game had already changed. The same story of disruption is not limited to transportation. There are a number of cases which are based on disruption. Students, today's case studies are designed to promote higher order thinking by requiring you to analyze, evaluate, and recommend practical actions in a real business situation. One of the case study is based on disruption. The session is interactive. You are encouraged to ask your question either in Hindi or in English. We have reserved last 15 minutes for your journal questions and answers. This may include your exam related query, preparation strategies, or any other IBS related doubts. We are privileged to welcome CA Ram Prasad sir, a prominent chartered accountant and partner at ASA and Associates LLP with extensive experience in auditing. His professional journey reflects strong technical expertise combined with strategic insight. We sincerely thank Sir for joining us today, especially during the audit season, and for taking the time to guide our students. With that, let us begin. I now invite C. Ram Prasad Sir to lead us through this engaging case studies. Sir, over to you.
Thank you, Deepak ji. I hope I'm audible to
Yes, sir.
you
Yes, sir.
as well as to the audience. Thank you so much. It is indeed a privilege and a pleasure to interact with our students, whom I call as our future chartered accountants and the torchbearers of this noble profession. We have been also handled 40 years back by some illustrious seniors, and today we want to carry the baton forward. I sincerely thank the Institute for this wonderful opportunity. And I must admit that this integrated business studies subject created a lot of excitement in me. First, primarily as a student, then as a faculty. The sort of vision with which Institute has brought this subject into the fold of the exam, and that it is an open book exam, clearly shows the vision of the Institute in making potential chartered accountants, that is CA final students, think strategically and with great insight. And I must give some background which will be helpful to you why this subject is going to be extremely important for you for the rest of your life. As you know, the profession is undergoing a tectonic shift because of AI. Traditional lines of practices are getting blurred. But what is increasingly happening, and this is my experience, is the client today wants to see a chartered accountant as a holistic consultant, and not as a mere bits and pieces consultant, somebody specializing in audit, somebody specializing in GST and all. He wants us to be very holistic in our approach. He wants to see truly a chartered accountant as a one-stop shop solution for his myriad of problems. And I can assure you, with about 10 lakh MSME companies and emerging companies, and as Deepak ji rightly mentioned, that we have startups, we have scale-ups, we have decicons, we have unicorns, we have zebras, we have whatnot in the startup world, all seeking advice. And the biggest advantage of this syllabus, which I see, is that it shifts the thinking of a chartered accountant from a traditional audit angle that we were all used to 30, 40 years back, to more strategic and very insightful. I have some few slides which I'll run through, and this is open book, so I will not take much of time, but I'll quickly run through where I see some perspectives and why this session, this class, this subject is probably an excellent one for you. It will help you crack interviews, I assure you. It will help you crack your career also in a beautiful manner when if you are holistic. So if you see, this is, it will make you think like a practicing CA. Some of the important points only I will take you through. It will think you like a practicing CA. That is exactly where practicing CAs score today. Many of the practicing CAs have shifted their model from traditional audit, tax filings to more strategic work, which is what the subject is all about. And another major thing I noticed is, I put the idea very clear, it is testing the judgment of students, never it is asking for recall. All you have to do is put a step-by-step approach. The conclusions will automatically come. And most of the cases, I mean, all single cases that I see are only realistic in nature. And they are, what kinds of cases probably a CS keep advising. The plus point of this course, what I see is that there is no negative marking for the MCQs. There are 5, and there are 3 descriptive questions. The descriptive questions really make you answer like an MBA. Your presentation skills will improve. Your analytical skills will improve significantly. Your answers are pointed. And the way we generally draft a memorandum to the board is exactly how this model is also put. Let me give you some practical insights. What we generally do is when we go to the board, okay, I'll take a practical scenario. There is a make or there is a buy or lease decision, or there is a make or rent decision, whatever be the decision. What do you start with? How does the board evaluate? You start with a very description of the issue. You start with the pros, the cons. You start with the finances required. You start with then you move on to ROIs, and then finally you arrive at conclusions. This is exactly how this answering has also got to be given. May not be this descriptive, but it helps you prepare. Tomorrow, as a chartered accountant, 1 year into the company, they are asking you to prepare a board memo. Your CFO tells, I need a board memo. I can assure you, you'll prepare actually a very good memo because you are aware of the flow of events. You are aware of the thinking behind it, and you will actually present it like a true memo. Issue, background, evidence is available, work done, then options suggested, and then alternates, and then you will also analyze from various angles. Company law, you will analyze from FEMA angle, you will analyze from direct taxes, you will analyze from GST, you will analyze from any accounting today because of India's and its various standards, and it's being a principle oriented standard. You cannot ignore the accounting implications. You probably have to be very futuristic. And then when you make a memo giving all these implications, I can assure you that document will stand the test of time. So my own example, when I was evaluating a 2,500 crore investment in my employment tenure once, I actually broke down the components into company law implications, audit implications, accounting implications, what documents we have to maintain, how this will be validated by the income tax officials, how my accounting entry will flow. So to that extent, this subject helps you. So I'm just probably giving you a very thematic approach to the whole subject. So that's why I put here, use a clear format, identify the issue, relevant provision concept, apply to the facts given, and then conclude and recommend. Of course, the board is empowered to take the decision. And another major advice I will give to chartered accounting profession and to aspiring CS like you is that always be open-ended, always be open-minded, always keep listening. Never ever think that your conclusion is right. You see if you can keep on making improvements. Our job is to make improvements till the last minute. So keep on thinking whether you have got any further points to put and all. So those are the points I wanted to highlight to you before we move to the next this thing. So that's what I have generally put, that ability to you have to read the case scenario, pull out the relevant facts, ability to connect issues across various, as Deepakji rightly said, financial reporting, your strategic management, your law, costing, etc. Think your important thing about this course, no? You have to think like a business advisor and not a technical expert. Your technical expertise is given. And I can assure you today with AI and Institute's ChatGPT, your expertise is actually taken for granted. The client is also having the same access. So what you need to bring is a fine distinction, your fine professional judgment, is a fine professional skepticism. One thing I want to tell you, nobody can remove two important qualities from you. Your skepticism, nobody can remove. Your judgment, nobody can remove. There lies your strength. There lies the human interface. And there I would think that you must think like a business advisor and not merely act like a technical expert. So this is, I will leave this to Deepak Ji when he is taking. Treat it as a lookup tool. Use the open book facility. Don't read anything during the exam. It's very difficult for you to understand any concept during the 4 hours. You got 4 case laws, you got 4 hours. Each case law ideally should take exactly an hour. Each case law is about 25 marks, and that's how you add up to the 100 marks. And please take only relevant materials, what is authorized by the CA Institute. And the exam technique plan, I think I leave this to you people. Mark the financial data, dates. Please understand one thing. Every single line, I read this case laws twice, thrice. I think I did a lot of reading of many case laws to understand the flow, etc. I found that every line has a meaning to it. Every line has a context. Every line has a connotation. So don't ignore any line. Don't ignore any facts. Another very important thing, somebody was asking me, sir, how do I approach it? Should I first read the questions and go to? I said, first read the case law. It's very important for you to read the case study in depth, peacefully, and keep noting the points and the side. This is how generally I have seen. I've had the opportunity to interact with some of the top-notch company law advocates and chartered accountants and tax practitioners. Believe me, they have a pencil and they have, of course, Sampath Iyengar or some Palkiwala or big books. They meticulously write, read, keep writing small bullet liners before they make their submissions to the respective department. So please use the pencil to identify the strategic points and the key points which you believe are very important. And with this, I think this is ideal time, 10 to 15 minutes for reading and tagging and then answering the MCQs and 5 to 10 minutes for the buffer. I think this appears ideal to me. So I also probably will follow this pattern. And common subject linkages is what is given here. You will have always typically related party transfer. You will have a company law issue. You will have definitely some GST issue. I think more or less all the broad pointers are brought here. Borrowings, covenant override, which is definitely entity level control issue. We have a business restructuring, which is again entity level issue to be discussed at the board. So these are the things. And common mistakes to avoid. This is very important. I thought you will find it useful. Answering each issue with single subject lens instead of linking across subjects. Please create linkages. Open book is not a substitute for genuine preparation. You have to be very clear about the concepts. Even if read limited, read it correctly. Don't spend too long time perfecting case study and rushing. Identification of issue can never be skipped. Today also I was advising my senior manager, and probably this is a very live and a very interesting question, a very interesting case. There was a GST issue on water. And as you know, water doesn't command any GST, so obviously there's no GST on it. But distribution of water as a service, definitely, a GST could be attractive. So we are debating about it. And then I was getting the message, how do you write an issue on that? What is actually the issue? Then what is the section? What is the finding of the GST official? And why this can not be a distribution? Because it is a government body, one government body to another government body or to an association, which is probably doing some public activity. So we have to build up a case. So that's how you probably link all these things. There is a GST issue here. There is a governance issue here. There is a legal issue here, interpretation issue. So you have all the things. You cannot look at it only from a single lens. And of course, ignoring word limits and producing unfocused answers cannot be the fact. So this is what it is. So with this, I'll probably get to the case law that Deepak ji was probably mentioning. The case law that we are going to talk about today is Caber Caps. I'll just share the screen with you and we will get into it. Yes, sir. I'm just sharing the screen. 1 second. Very good. Yeah, I think the screen is visible.
Yes, sir, it is visible.
Very good, very good. So I want to, bring all these things. So this is out. Very good. Right. I'm removing everything. Very good. So I think what we will do is we started 1850. We will probably run through this. I would scroll the screen. I request all of you to pay some attention. 15 minutes, just read it. Caber cabs. Let me read the main points. Would that be all right, Deepak ji, or they can read? What is your suggestion?
Sir, you can do slightly zoom.
Okay, zoom you want me to do. Okay.
Yeah.
1 second, I'll just do.
It is on right. Yes, sir. Yes, sir. Now it is fine.
Now it is fine, sir. I think it looks better, right?
Yes, sir. Yes, sir.
Excellent. Very good. So you think we should read, or I mean, we can read it, some of the items, or what is your thought process, sir?
Sir, you may read, sir.
Very good. I will read
And
it.
you may explain relevant text or your thoughts, sir.
Very good. I will do that, and then probably then we'll get to the questions. I think that's the best way to go. So Caber Cabs, which is better known by the name Caber, is an Indian startup, privately held, provides online cab services. There is two gentlemen who founded this company, CTO and CEOs, Bothra and Jain. They initiated the operations from Chennai, and now the headquarters is Pune. Within a span of a few years, it has expanded its base to 85 cities across the country, and we'll find that it is pretty inspirational to find that they are having about nearly about 2 lakh cars operational in its cab service. Now they are introducing auto rickshaw to cities like Mumbai, Hyderabad, and Jaipur. So this is how probably an example of a fantastic disruptor. Suddenly, you find that this has come into the market. I can share some excellent examples of companies like this, but we will definitely talk more of it once I complete the case study. In 22, the market share of this company accounted for 50% and reached a valuation of 6.5 billion USD, which is making it a solid unicorn. The business models disrupted the industry by offering a convenient way to hail riders. It also really brought more efficiency. They utilized a technology-driven approach using algorithms to match riders with the nearby drivers and optimize routes. Dynamic pricing model known as surge pricing, which adjusted the price based on demand, supply, allowing the company to maximize revenue during peak hours. It faced regulatory challenges and opposition from taxi unions in many cities, leading to legal battles and protests, which of course we are aware in the initial days. We started with Taxi for Sure. Just to give some insight, there was a company called Taxi for Sure, which got converted into Ola, which is what you see. Of course, Deepak ji did mention the compete is Uber. Now we have got a couple of more competes which are coming. One is Rapido, the other is Nammayatri. Just to give you the context, there is this app called Nammayatri, which is operating in cities like Bangalore, Chennai, and all, which is on ONDC network, where the platform is provided by the government. It is not, the platform is not owned by any private company. It is owned by the government, and there are players in it. And you can actually host any of the services on that platform. Just for knowledge sake, you can find it interesting. The major customers are of Caber are basically individuals who don't own a car and can't drive a car, a segment of people who need an affordable ride. Various customers need a premium ride or a quick ride, also book rides with Caber. Overall, it shows the people who are growing, who are looking for convenient cab options and bookings. Caber Cabs is among the fastest growing online services provided in India and aims to dominate the market with its innovative customer-oriented business strategy. So a couple of words are very, very important here, which I would I would pause for a moment to give my thought. One, innovation. Extremely important when you do businesses. What is innovation? What is the problem statement? Whenever you are doing startup, there are 3-4 questions in startups. I want to pause for a moment and educate and share some thoughts. Whenever people talk of startups, the first question which is asked is, what is the problem statement we are tackling? Then they'll find that okay, this is the problem statement. Very good. Is there any innovation? What is the innovation in it? And then they talk. What is the customer business strategy? Customer-oriented business strategy. So we talk of disruption, we talk of a problem, we talk of a solution to a problem, and we talk what is our offering. So this is how it is probably positioned. So this is something that you have to keep in mind when you're reading a case. Mobile app awareness to common man through a launch of a customized mobile specific technique called as app analytics, with the help of which the app can track, measure overall performance of services. Targeting the right audience, which as per recent study has confirmed the average customers were of 20 to 25 years of age, who are working in the corporate companies and needed cab service to pick them up and drop them at their office premises. Excellent. So we are talking of typically Gen Z. Today we talk of Gen Z, which is you are also belong to Gen Z. You are all final students. Today you value convenience over everything. So they need cab service to be picked up from home and dropped. Cabber works as a digital platform aggregator, app platform connecting passengers who need. So I will skip this para. Drivers supply the demand, and Cabber acts as a marketplace facilitator to make all this happen. Seamless in a mobile platform. Certain facilities provided by Cabber to its passenger customers are convenient cab bookings, real-time tracking. What are the facilities they are providing? You see here, you cannot read this para in abstract. You have to start. The word starts with certain facilities are provided. What are the facilities they are providing? You look at it. Convenient cab bookings, real-time tracking, ride-hailing services, ability of passengers to track the location of their assigned vehicle in real time using the map. This feature provides the estimated time of arrival. You can plan your time. You can see the route. You can also figure out when you reach the location. It promotes cashless rides by giving option for the passengers to pay for the rides using digital payment wallets. So everything is coming very comprehensive: debit cards, credit cards, wallets, cabber money, digital wallet. This eliminates need for passengers to pay cash at the end of the ride, offering a convenient and secure payment exercise. The passengers using cabber experience shorter waiting times. This could be due to factors as the availability of nearby drivers, efficient routing, and effective matching algorithms. Then quickly connect passengers with available drivers. I will skip some this thing and allow you to read it. By providing upfront pricing, Cabber aims to offer transparency to passengers regarding the cost of the ride, helping them make informed decisions before booking a ride. In the Cabber app, multiple ride options typically refer to various categories of rides are available. They are like micro offers, small and affordable costs for short trips. They have multiple ride options to diverse needs and preferences, providing flexibility in terms of vehicle type, comfortable pricing. You can see that in Ola. You've got Prime, you've got SUV, you've got Prime Plus, you've got Priority, you've got hourly rates, you've got daily rates. You have combinations that you can choose actually. Users can you can select the option which best suits for your requirement. The hiring department at Cabber undertakes an extensive research to hire their experienced drivers, which can be further trained to professionally handle high-end luxury segment customers. You also see here one of the biggest things in disruption is the various types of market segments that you're addressing. One of the things that people have to be aware as chartered accountants today, traditional markets are completely getting disrupted. Today, just to share a practical experience, I was in FMCG company, and I'm auditing the company, and I was talking to the chairman. Sir, it's a company which is in food items. So I was asking the chairman, sir, how are you addressing the market segment called Gen Z? Because today Gen Z has got a lot of disposable income. Gen Z itself is a market segment by itself. How are you addressing the segment? How are you meeting their aspirations to have new products, to have new experiences, food experiences, etc.? And he said that innovation is part of their strategy, and that they are constantly innovating new products. They are constantly innovating the R&D they are doing to find out which palette suits the customers. So that's something that really struck with me. And I said there's a new customer. So high-end, here you can draw a parallel to high-end luxury segment customers. So this is how you have to expand your broad knowledge. This broad knowledge will not come by reading. This comes from a lot of observation. For this, the company plans to approach a staffing agency that will provide candidates based on Cabber's specific requirements for an experienced driver. They do background check to ensure their fitness levels and safety record. Cabber plans to have regular maintenance done on the cars to ensure they're in working condition. That's good. They also have approached insurance companies for accident and car insurance. Well, I think this is something that they are going beyond the normal one, and they're trying to see what they can do to really offer the world-class service. We are taking 5 minutes now to read. So many points we're able to get. You are able to talk of disruption, you're able to talk of innovation, you're able to talk of various things which are available. Then we'll move to more specific ones. After hiring its drivers, they provide flexibility to drive on their own terms, like setting their own schedule based on preferences, day shift, night shift, full-time, part-time. Drivers can also decide where they want to operate within a particular service area. They prefer to work in specific neighborhoods, cities, regions, clusters based on demand, traffic conditions, or familiarity with the area. Cable training sessions for drivers are comprehensive and focus on enhancing professionalism, safety, and customer satisfaction. I want to tell you that this I've experienced in one of the clients who are actually doing this, of course, in a separate segment. They are EV. And I was actually stunned. I was quite, it was insightful for me to see that they were doing a very comprehensive 1 week program for the drivers. And I said, what is that for to teach them for 1 week? Then they explained right from the grooming, right from the way they dress, right from the way they conduct, right from the body language they use with customers. Everything is taught. Real examples are shown. They are videographed. Then they are shown how the mistake, what are the mistakes they are making. And all these things are done to take the level of service to next level. And at the same time, you are also grooming. This also, these training sessions, I have also noticed, sharing personal experience again. In the retail industry, when India opened up its retail segment in 1990s, early 1990s, we were doing an audit of a very large FMCG supermarket chain, which started its first operations from Calcutta, then moved on to South. And they actually created a separate retail training institute because they found that the staff who had come there were all from lower income backgrounds. They were not properly trained. They were very enthusiastic. They had great energy. They had very good attitude towards work, but they actually didn't have great training. So I remember the HR director whom I spoke explained to me how the training institute has been created. 3 month training. Then they are onboarded into the shops as customer service executives, and the experience is so pleasant. So that's amazing actually. So that's how it is done. So they cover a range of topics like safety protocols, customer service skills, navigation techniques, maintenance, technology uses, financial management, etc. Providing education guidance, KBR ensures the drivers offer reliable set of experience to the passenger. Next paragraph you see, KBR supports his drivers by facilitating access to vehicle loans, enabling them to become owners and enhancing their earning potential. Through partnership with financial institutions, KBR offers specialized loan programs with competitive interest rates. Additionally, KBR runs a vehicle leasing program. They also run a vehicle leasing program in many cities to help. So they do loans. They also get into vehicle leasing program. So these are two important facts that you must park in your mind. They not only help you connect with the loan providers, they're also running a leasing program. It will be helpful to you at some point in time. So every fact must be really read with some context. Additionally, KBR runs a vehicle leasing program, which I explained. Drivers pay an upfront security deposit, and payments are automatically deducted on a weekly basis from their earnings. So your mind should think from an accounting perspective how this has to be tackled from an accounting perspective. Then KBR purchases motor vehicles or motor cars from Shakti Motors and leases out to drivers. The lease arrangement states that case of defaults. So there is a seller, there's a lessor, there's a lessee, and then KBR has the power to repossess the vehicles leased out, and they claim a depreciation from income tax. So you have got accounting, you have got income tax in this para. So your mind should register these points, and then you have got something called the Motor Vehicle Act also, which is pending to be taken should there be anything which is coming there. Then KBR makes money by taking a cut in each ride. KBR provides a driver its platform the robust supply of ride requests to accept, fulfill, make income. While making a booking, the passenger pays KBR for the ride through the app. KBR then transfers the payment to the driver's account after taking some amount of trip commission for doing the job of a broker. The commission may vary from 15 to 30% depending on the market. So from an accounting perspective, this hits you that this is an agency. So it is a ride sharing platform. I can't take any income in full. It's only the net I need to account for. So that makes it much more clearer. Then there is something called dynamic and surge pricing is charged whenever there's high demand, depending on the algorithm. Like when the flights land, the airport surge pricing immediately comes in. So when the passenger cancels, then you have a cancellation fee. That's another revenue. So immediately your mind should say the cancellation fee is also an accounting head for me. Let me see what is the income I'm making from it. So I'm just trying to correlate everything from a very broad perspective of how you look at things interactively on a holistic basis. KBR app is very popular. I got another 5 minutes to read this case law. 15 minutes. I'm going with the timing that I have mentioned so that we complete it. Keber app is very popular app with millions of active users making good use. Promotion, they use it for brand promotions. It current app interfaces that pushes feed style layout with intuitive content consumption. So it may not be there in this question, but you know for sure that this app today is a marketing tool also. It is very much possible that you can have ad income because somebody is playing an ad on this during the time when the customer opens the app. You will find that in many apps today that there's a ticker which keeps on running. The company offers discounts and promotions to end users that are not our customers to encourage use of platform. These are in the form of discounts and promotions, so targeted end user discounts. These discounts or promotions are limited number of end users. End user referrals. These referrals are earned when an existing end user are referring to a new end user. These referrals are typically paid in the form of a credit given to the referring end user. Referrals are also offered to attract new end users to the platform. The company records a liability and the corresponding expenses, sales and marketing expenses at the time of referral is earned by the referring end user. Market weight promotions. You can see in some right companies, they say first 3 rates are free. So you must obviously understand that the entire is an expense, marketing expense, and it cannot be pushed as an asset or something. Be careful. That must be debited to the P&L. Market weight promotions. These promotions are pricing actions in the form of discounts that reduce the end user charge by the drivers to end users. Keber records the cost of these promotions reduction from the revenue at the time of transaction is complete. It's perfectly the way to go when you issue credit notes. Refunds and credits used to dissatisfaction with the platform are recorded as marketing expense or reduction of revenue. Keber offers 24/7 customer support to ensure that passengers and drivers receive assistance at any time, enhancing the overall user experience. Keber's value proposition revolves around providing convenient, safe, and reliable transportation solutions. Recently, Keber is planning to introduce customized luxury rates to attract high-end customers. So this is a very important one. Due to expansion of business in various segments, there is a restructuring, and as per the board, new hands are required for decision making, for which qualified personnel are required to be appointed as directors. And you will find that the company already has got 7 directors. Now with the revised strategy, board of directors desires to increase the number of directors 7 to 16. So immediately your mind should trigger that there is a company law potential issue here. There's a company law requirement that has to come. What is it we have to see? So there is this is how you keep tracking the issues. And then the market share is 55%. It recorded a valuation of, it has reached a valuation of $6.5 billion US. Of course, they give a small fare breakup. X books on auto for traveling from one place in Jaipur to another place in Jaipur, and the completion of the trip, the operator received fare from X. Possible breakup. Driver fees 800 and the convenience charges are 200. So total charges are 1,000. So if you look at this case study, I will probably give you things like what are the things which are accounting issues. What is to be accounted, what is to be recorded as market expenses, what is to be recorded as promotion expenses, advertisement cost. Then there is an issue definitely on income tax. They're leasing out assets, so what could be the potential issue? Then you read it carefully. There is a small company law matter. Of course, there are many strategic things from business perspective that you need to probably present to the board. So with this background, I exactly took 650. I took more than 15 minutes to complete this case study. Now, what we will do is I'm going to discuss each of the answers and probably give you, before I get into answers, let me give you a couple of more examples of this disruption which is happening in the marketplace. As Deepak ji rightly mentioned, today traditional forms of business are getting questioned. There is one very interesting listed company. I'm sure many of you will be noting. That company is called Nykaa Limited. You can Google it. It is in fast-moving fashion goods. Very simple market segment they are targeted. In this example, we saw something on high-end luxury customers being targeted by Keber cabs. Nykaa went reverse. Nykaa was targeting middle class and lower middle class population, which could not have access to probably very good fashion accessories. Particularly the female population. Very interesting their model is. They're targeting them with lipsticks, nail polishes, and all other accessories which a woman would normally wear, targeting the new woman workforce. So 3-4 segments I was surprised that they were tackling. One was Gen Z, the other was lower middle class. Number 3, extraordinarily affordable price points. Number 4, meeting the aspirations of this population with high quality products. So this is how you see a business strategy in a whole and say why it is successful. The answer is lying in all these things. So with this, let us slightly get into the multiple choice questions. And what I'm going to do is I'll probably definitely be reading the questions, some answers to you, and then we'll figure out the answers, right answers. I will definitely discuss with you. Which of the following statements accurately describe the characteristic, the disruptive innovations of Caber? Caber in answer, the choices are Caber initially targeted niche markets to establish its presence. Caber offered competitive performance and quality compared to existing products. Caber immediately dominated the market upon introduction. Established companies did not align with the preference of the current customers and overlooked Caber's disruptive innovations. Caber innovations tend to evolve and improve over time, eventually surpassing existing products and services. You look at these options, A, B, and D only, which is very good. A, C, and D, that's another option given to me. A, C, and D, very good. That is, I need to see whether Caber immediately dominated the market upon introduction. E is Caber's innovations tend to evolve and improve over time, eventually surpassing. I look at option B, I'm fairly clear. When I read the case study, I don't think they dominated the market upon introduction. They definitely were disruptors, but they could not dominate. Then Caber, their share is only 55% today. Caber's innovations tend to evolve over a period of time, which is probably not correct. They actually keep on evolving, and they kept on introducing parallelly products. B, D, and D, not the right answer because D is a good option. Definitely D may not be the right option. Caber offers competitive prices and competitive performance and quality compared to existing products. D, again, established companies did not align. That is a correct answer. That could be a perfect choice, but E may not be right. And A and C and D, if you see, Caber initially targeted niche markets. That is correct. They started the operations from Chennai, then they headquartered to Pune, then they introduced auto in Jaipur. You see, they did not do a pan-India launch at the same time. They went city by city. They started getting into new markets. So that's how this answer must be looked at. And then C is Caber immediately dominated, not the right answer. They did not dominate immediately. They faced, what is the reason? They faced a lot of strong protests from local people, unions. Customers were still confused. They were still going to them. As Deepakji rightly said at the introduction of the session, local unions actually were dominating this segment, and they prevented many of these guys. If you had seen the papers when Ola and Uber and launched their operation, there were many protests. There were a lot of protests from existing drivers. Then slowly everybody got the benefits of technology. They understood that this is not against them. Then they are now aligned with it. Maybe one more interesting information for you, which I can share to you because you're all potential chartered accountants, is there is this Vietnamese company called VinFast. And I'm told now it is coming in with a massive disruption, bringing in EVs. EVs. They are the largest EV producer in Vietnam with operations in Philippines and Indonesia. They are now targeting the Indian market, and they are putting a plant in Chennai to build and lease out and ensure that these EVs are sold as they are going to come as ride-hailing cabs. So you will see many VinFasts in airports very shortly. So what is the right option here? If you see the right option here, I think the right option is the first one is A, B, and D only. Caber initially targeted niche markets. Caber offered competitive performance and quality, which is perfectly correct. And D, established companies did not align with the preferences of the current customers and overlooked Caber's disruptive innovations. The existing cab companies took no notice of Caber and its technology and how they were, looping in customers. How they were actually matching the ride-seeking customers with the drivers who are having cars. which was not the conventional model. In the conventional model, the drivers were actually dictating the price. The drivers were dominating the market. The drivers were deciding whether they will go to a place or not. Every single dominant aspect of the existing business were disrupted by Keba, and that's how they were able to be successful. So your answer for this question would be A, B, and D only. So I hope this is how you analyze a case. This is how you bring an answer. Well, the next question again in the MCQ, with reference to the fair breakup, yeah, with reference to fair breakup, what should be the total amount of fair and GST, assuming rate of GST 5%? If X ailing the right is not claiming bonus, here 1050, 1010, some options are given. Probably here, definitely we'll have to think of GST aspect. What is the GST aspect? Here, obviously, the person who is paying the fees, there is a customer, probably, he will take credit or not take credit. They are customers who are coming in droves. Obviously, no records can be maintained by them. So what does the Act say? So we'll have to immediately think what is a section in GST which probably talks of it. This is an e-com operator, and probably you'll have to think what is the right section for it. So you have to think from a GST perspective, and we'll find that section, the charging section is 9(5) of the GST Act, and 9(5) of the GST Act very clearly brings out the answers here, which is very clear that the section 9(5) says that GST for supply of notified services section deals with taxability of the services, the output tax of which shall be paid by the electronic commerce operator. Hence, here the notified services include service by of transportation of passengers by radio taxi. You've got Peru, which is a radio taxi. You've got maxi cab. You've got motor cabs. You've got cycles, motorcycles, etc. And therefore, the provision section 9 is applicable. Therefore, the person liable to pay GST is the service provider, which in this case is cable cabs. And so he is a service provider. Your answer should be very neatly written. Service provider, cable cabs is the ultimate person responsible discharging the GST liability. The charging section is 9(5), section 9(5) GST Act, and a notification and so on. So is a ride-hailing cab as a taxi operator. Hence, he will discharge the liability. The liability is 5%. So 1,000 is the charge. There's two breakups given. Both are attracting GST. 1,000 into 5% is 50 rupees. So your answer is 1,050, which is the correct answer. Very simple. How you logically give the answer is very, very important for you. And then we move on to the next question, which is probably more easier for you from an answering perspective. Caber charging a premium for instant booking of prime cars has provided a new value to customers by making service access easier and more convenient than its basic version. Adaptability to which model created a significant advantage for the organization. So what is this model? Is it experience model, subscription model, on-demand model, or free model? We'll have to understand the business a little better to answer this question. What is experience model? Experience model is a concept where you experience it and then you pay. There's nothing called, so you experience, like your food samples that many people give you. If you go to any exhibitions or if you go to any FMCG new product launch, they'll say, "Sir, kindly test the products. So kindly taste it, kindly see whether it is suiting a palate." That's an experience model. Then is there subscription model? I pay subscription, then I keep. It's not there. So this model, you can actually hire a luxury cab anytime you want. It is on demand service. I demand it, I get it. So it is a demand model. So it's an on-demand model. And the last one, is it a free model? No, it is not a free model. Why it's not a free model? Because you are going to get a bill for it. You'll have to pay for it. So it's not a free model. So I think that puts the things in perspective. The right answer for this is on-demand model. And the best way to explain to it is, the reasoning is very simple, that this is a premium service for instant booking of prime cars, which aligns with the on-demand model. The model focuses on providing immediate access. That is very important. The immediate access is there to the luxury car, and this is always at a premium price, and it is to meet the immediate needs and demands of customers. So by offering instant booking of prime cabs, Cabr enhances its value proposition to its customers, its convenience and accessibility, and thereby creating an advantage to the organization with the on-demand model. So I think this is something that how logically the answer should flow, and how you have to think through. So very, very important when they give options to you in MCQs, kindly evaluate it deeply. What is this model? So that's why your reading of this question helped you immediately. There was a separate para, if you read it very carefully, where they said that we have introduced this high-end product, which is why we are able to very neatly answer this question in no time. So analyzing the facts from above, please determine the classification best describes Caber's current growth stage. Very good. 4 items are given. It's my duty to explain to you all the 4 from a knowledge perspective, so that you understand where we are. And I've answered some more. Startup, well, anything which is bootstrap, which doesn't have great volumes, which is in either research phase or product phase or limited revenues, is a startup. The scale up is one where actually you have actually revenue growing very fast. The cost is very low, and you are approaching a significant milestone. You find there's a product, there is a demand for a product, there's a great attraction for the services you're entering. Actually speaking, you could potentially move to the next stage, which is what unicorn. You go to Caber case study, they are valued at 6.5 billion valuation, which essentially says it is already unicorn. Any unicorn is one which is a valuation of $1 billion is a unicorn. A unicorn is one which has got revenue stream. It has a proper cost structure, may or may not really make profits, but then it is the metrics here is more from valuation perspective, which is a $1 billion valuation, and hence it acquires the status of unicorn. So $6.5 billion already is given in the your case study, and this your answer cannot take more than 10 seconds to write. It is a unicorn. Incumbent are companies which are well established, matured. They are because they are well established and matured. You have to be very wary and understand that these companies which are incumbents are not agile. Please understand that they are not agile. You will have some case studies going forward on that. They are very hierarchy driven. They are very large. They are many layers of decision making. Their response time is not fast. Their disruption ability is very limited by the sheer size. Most of the companies today, large companies, I want to share this experience, today have something called startup incubation centers within those companies. I'll give you some examples from the world. IBM, Intel, Google, Microsoft, you name them, the biggest of the biggies, they all have separate funds dedicated for startups, because they know they're incumbent companies. They don't want the response time to be very, very late. They want a faster response. They don't want to miss opportunity. So all these companies, what they keep on typically doing is keep on conducting programs, hackathons, identify some startups which they can fund, where they can invest. I've seen Infosys has a separate dedicated fund to it, and they had some great success stories. Out of 10 investments they make, 3 or 4 make fantastic money, 4, 5 they write off. That is how normally the business operates, and one probably could be revenue generating and earning. So this is what incumbent is. Couple of more terms for you. Decacon is a company with a $10 billion plus valuation. There's something called Centicon, which is $100 billion valuation. There's something called Zebra, which is Zebra is one more startup in nature, which is looking for sustainable growth and profitability. They are not focused on valuation as much. They are focused on very sustained the profitability and the growth. So this is the category called zebra. So this is more from a classification perspective to help you with some enlightened knowledge on this. So please remember these terms: unicorn, incumbent, scale up, remember startup, remember decacorn, remember centicon, etc. This is just, if you even listen, that should be fine enough. Very good. Uh, Again, this fifth MCQ is about company law, and it talks of appointment of directors. So we deal with the increase in number of directors. Which statement is correct regarding the increase in directors? The increase in number of directors can be implemented by passing a general resolution, general meeting. The company shall pass a resolution, special resolution in the AGM to increase the maximum number to 16. The company cannot increase the directors beyond 10. The company cannot increase the number beyond 15. Here, they have given you two sentences, two options, I would say, which probably you can eliminate. The company cannot increase the number beyond 10 and 15. Both are to be eliminated because you have a choice to go beyond your maximum limit, which is 15 under section 149. If it is more than 15, very simple answer, you need a special resolution. Answer is staring right at you in option B. And then, you also have to be very clear that the option A is not right because it talks of a general resolution, general meeting, which is not accepted. You require a special resolution. You see, your knowledge of Act, how it is helpful for you in answering this question in less than a minute, and you can actually score your marks just like that. Very, very easy, I would say. But your knowledge of directorship should be very important. You cannot restrict it to just this. This section talks of women directors. It talks of independent directors. So you have to be very clear. Sometimes they will put you tricky questions. They'll give you questions like they'll make it 10 directors. Then they'll say uh, 1/3 has to be independent directors. How do you? So you have to say the rounding of next higher number is typically the one which practically people say 4 independent directors should be there because you can't have 3.5. So things like that will come into play. Women independent directors should be there. When you're reading this in unlisted company, be careful because they also require independent directors if certain thresholds are reached. So I thought I should, when I give an answer, I want to make you understand how you read a section. A section must be read in totality. So when you read company law, please read it from a totality perspective. Your knowledge on company law here would be helpful in filling up this answer in exactly less than 2 seconds because the option B is staring right at you. So this is how you have to be very clear. So when you, in a live exam scenario, I can probably give you guidance. You are carrying Companies Act book, which I think could be allowed, should be allowed, I think so. Immediately just get into Companies Act and find headings. Go into appointment straight. If you don't know the answer, it's there. Appointment to director, separate section. Just read it and you'll find the answer there staring at you. It'll take hardly 2 minutes to get there. So please know where you are. In the open book exam, it's very important for you to figure out what is the content of the open book. That's very, very important. Very interesting, but very, very important for you. So I think this is something that probably I would love to, give you some background on the MCQs. With this, let us move on to the descriptive questions. Here, probably, I want to spend some time on business, canvas. Then I will probably go to question 6, which is probably much simpler than the last. Of course, the last one is an income tax, which I can also definitely deal. I'd like to start a little bit on question 7. Draw a business model canvas for cable. So, what is business model canvas? I know it's it's not an interactive session, so I will probably have to give the answer myself. The business model canvas is a very, very important strategic management document, which is a one-pager. The beauty of this document, a business model canvas, is a one-pager. In one pager, whenever you're pitching for startups, if you generally see startup hackathons or startup, contests, people don't have time. The judges don't have time. There are about 100 guys competing. They look for business canvas. They will ask you the question, what is your business model canvas? And then you probably immediately have to, put. It's a strategic management tool that describes and communicates business idea or a concept to a single page. And in a single page, how do you do it? You need to have headings, you need to have headers to which I need to fit in a lot of things. What are things we actually, this is divided in 9 core building blocks, and these core building blocks are infrastructure, offering, and then the finances and the customer. So there are these basically, these 9 building blocks and the 9 headings which I can read for your benefit when you draw this business canvas is customer segment, the value proposition, the channel, the customer relationship, the revenue stream, the cost structure, revenue stream and cost structure, very important. Key activities, key resources, and the key partnerships. Very, very interesting. Here, probably, once you get this, I'm giving my answer extempore. What is my key activity? Key activity is creating a platform, having technology people to upgrade my technology on a regular basis. Have a solid customer backend, customer management backend, then a solid training for my drivers. These are the key activities, key resources. What are my key resources? Financing is my key resource. My finance companies are my key resources. Drivers are a key resource. Customers are key resources. So like that, we need to probably think, and then probably look at many things like this. The key partners are technology providers, the financial institutions, then the map providers. You are providing route maps, right? The map providers, they are key partners. The payment processes, there are fintech companies which process a payment through GPay or Amazon Pay or whatever it is. Then the local authorities, because without them you are not there. Approvals are required. Then drivers, the staffing agency, they are the key partners for you. Activities are communication, drivers, informing them, then communication with the customers and partners, hiring drivers, uh, teaching them, analyzing data, keeping on improving and the services, looking at this thing. Key resources. What is my key resource? Platform. The tech platform is my key resource. The algorithms, the IPs that I want, they are the key resources for me. The brand is key resource for me. I have to properly create an IP for it and the staff. These are the key resources. Then the customer relationships, very, very interesting. Review rating, social media engagement, customer support 24/7. Value proposition. What is my value proposition? Flexible earnings to the drivers, on-demand service to the customer. These are the 2 critical aspects. Safety and security, convenient access, rate tracking, map tracking, pricing, breakups, etc. Complementary benefits, etc. Channels, Kyber app is a channel. Cost structure, you see, very, very interesting. The settlement cost, the legal cost, the driver cost, insurance costs, salaries, tech salaries, sales and marketing costs, then R&D expenses. What is my revenue stream? Simple, right? Transaction fee, advertisement stream could be one, cancellation fee, then the search pricing and Kyber app interfaces by various companies could be one excellent revenue stream. It could also involve advertising. So all the 9 building blocks are sort of covered here beautifully, and you will find this very, very interesting. So this is how you probably think of building a business canvas. So when somebody gives a problem to you and says that I want to do business, you are a chartered accountant now. Please tell them, I want, please engage with them on these building blocks, sit with them, get these building blocks written one by one, one by one, one by one, and then you will have to find solutions for each of these things, which is there in the building blocks. I think this is something that I would love to explain this context to you, because this is business management at its best. I don't think chartered accountants traditionally would be comfortable doing this, but this is the requirement of the modern age CA. So spend your time on this. The answers will flow in very, very logically. Now, going to the question 6, I'm trying to, probably really get there to your question. Based on the case scenario, how did Kyber address customer pains and generate gains? And what specific strategies and features did it implement to enhance the overall customer experience and contribute to social and environmental benefits? Discuss. So here, customer pain. So pain and pain deliver gain. I think concepts like that are coming. Very, very elaborate answer is there, but I would like to discuss the features of the answer more than the answer itself. So here, what are the pain relievers? What are the gains? I think it's a very interesting, very interesting situation here. Uh, Business pain. As I told you, any startup, there are two concepts: problem statement and the solution. What is a problem statement I'm tackling? That's why whenever people are doing startups, whenever people come to me for audit reviews and all, I said, is it a startup? Okay, very good. What is your understanding of the startup? Then they'll give some examples, etc. Then I ask them only one question: what is the pain point they are trying to relieve? If they don't have an answer, I actually tell them to go back and do an audit and come back. Then they have to remove a pain point. You see, just a couple of examples I can give you, because it's always important to correlate this with examples. There is this new Gen Z, right? You are all Gen Z. Gen Z today is actually looking at health as a priority. Health is a big priority for Gen Z. So I am actually looking at things like how do I improve my health? How do I improve my markers? How do I handle this stress? And what do I do? And today you've got enormous apps. You've got gyms. You've got CureFit. You've got everything. Problem statement: health. Problem statement: avoid untimely, uh, unfortunate events in life. Problem statement: consistent health and consistent aging. These are all problem statements. Lack of consistency is a problem. Solution. So you find solutions and then you answer. So that's exactly what here you have to replicate those into this answer and then figure out the pain. Pain is something that annoys people. That is, before, during, and after getting a job, including unwanted cost situations, negative emotions, etc. Anything which is negative, anything which is irritating, anything which is annoying is a pain. So our job is to reduce the pain point. Pain relievers are those services and products which alleviate the customer's pain at any point in time at different stages. So in the given study, the customers, as Deepakji rightly mentioned, we were at the mercy of the taxis. We were at the mercy of the local unions. We were at the mercy of the drivers who used to stand in the uh, uh, bus stands and then demand unreasonable prices. They were demanding huge prices. So that was the pain point. Very poor quality of service, poor quality of driving, lack of transparency in the pricing, etc. They were all the negative points. And Caber, what does it do is it significantly reduces the waiting time for passengers and ensures a quicker and more reliable ride. Another major pain point was customers' security safety. Today, a woman gets into the car, immediately live tracking is shared with the family member. You've got the SOS button in the car. So that is another major pain point which has been relieved. And Caber, how does it relieve this pain point? It does a security check on the drivers. It ensures the passengers feel confident and secure while using the cabs. And so these are the pain points. Then customers, supposing you have to pay 20,000 rupees, you can't be carrying 20,000 cash. So how do you do it? Caber relieved that pain by saying that I have a digital wallet, you can pay me later. I have my NBFC mutual fund. Fantastic. So you will exactly be given on, they give a credit period of 30 days. Exactly on 30th day, we'll have a bill and you can pay that amount to settle it. So your pain, I can't carry so much cash. How it is relieved? By a payment wallet. So this is the pain and a pain reliever. This is how you can answer this question even in a very nice tabular format. One side pains, and then the other side would be pain relievers. You can actually do that. That will be wonderful for the presenter, for the examiner. When he sees it, he'll be very impressed with that. So the other one is gains and gain creators. Gains, which describes the benefits that customers can expect, including unexpected but delightful complementary benefits. This is, positive. This is something which is positive, which gives them social. Like, some of the benefits could be: you use the cab facility, you pay so much, You can have a discount in a restaurant. You can actually use it to redeem your points. So you can have loyalty programs, and you can create that. And you go to airlines. A fantastic example of gain and gain credits use of airlines. Every airline has got its card. Okay, every airline has got its card. It is a loyalty card. It has got its program, and they've got the alliance program also. Star Alliance has got its program. To give an example, Lufthansa, I think, is a member of Star Alliance. You can travel in Lufthansa. You can travel any other alliance. You have all the points accumulated. The gain creator for you is that actually you can suddenly upgrade from economy to business class just by redeeming your points. The immediate attraction, the immediate thing for you is, from an accounting perspective, is how do I account for this loyalty points? It is a liability. It can be encashed anytime. So that's an accounting aspect that you need to see. The business side is that it's a gain creator. An accounting aspect would be, how do you create loyalty program, and how do you account for it? And what is the disclosure in the accounts? So I'm correlating just one business scenario and all these things. Caber catered to customer preferences by providing multiple ride options. It's a gain. Economy, premium, shared rides, and customers expected consistent high quality service, 24/7 customer support. Additionally, Caber offers flexible earning opportunities for this. You see, for the drivers, okay, this is for the customers. Now, what about my service providers? My service providers is a very, very important element of who are my service providers, who are my suppliers, who are my vendors, to put it in colloquial language. Without them, I can't survive. Without them, I cease to exist. They are your drivers. So they offer drivers, partners, they call them partners, driver partners, flexible working hours, flexible options. You find that in Amazon, you find delivery partners, the food apps, Swiggy and Zomato. They actually now work. I know many college students who work for 4 hours. I know one gentleman who works in Rapido as a bike rider, bike captain. He calls himself captain, and he actually operates between metro to the nearest apartment on a daily basis. And I asked him out of curiosity how much he make. He said, "Sir, on a good day for 4 hours, I make about 1,000 rupees." I mean, that's an amount over and above his monthly income that he generates. So those are the gain creators. They provide opportunities for drivers. They provide employment opportunity, economic transactions, thereby contributing to the growth of the local community. And these social gains were complemented by Caber's environmental contributions. The ride sharing algorithms actually beautifully take into consideration the route maps. The route maps, if you see, suddenly will show traffic density. They will give you alternate routes. So when you are giving alternate routes, you are ensuring that there is less traffic. Cabs, your cable cabs can move at a very good speed, at an optimum speed, thereby reducing the carbon footprint, reducing the depreciation of vehicles, reducing the need to keep changing the vehicles, making it very comfortable for the customer as well. So social impact is there, environmental impact is there. That's how we look at a grain creator. So this is a very, very broad answer about this pain and pain relievers, gain and gain creators. So kindly look at this aspect when you are answering all these things. So I will move on probably to the last question, which is the subject matter of the income tax. Uh, Definitely the section referred is the old section, the new section is section 33, 34. But the concept as far as income tax is concerned doesn't change. As I told you, this session is more on knowledge testing rather than on it is on knowledge uh, it is on knowledge sharing and never on you know it is not on testing your section knowledge. So here the last question, I'm just trying to, 1 second, just bear with me as I share the screen. 1 second, it's paused.
Sir, you are on mute. Sir, you are on mute.
Sorry. Yeah, my apologies. With reference to the case, the depreciation claim is rejected by the assessing officer on the ground that Caber has only financed for purchase of leased vehicles and hence neither the owner nor the user nor use the motor cars for business. Comment on the contention of the assessing officer. Well, you probably have to definitely go to section 32 of the Income Tax Act, which very clearly defines that depreciation on leased vehicles. It gives you options and things which are, if you are using it for the purpose of business, you may not be using it. Still, absolutely, you can claim depreciation on it. The answer is very, very clear. There is also Supreme Court judgment supporting that, and I'll read the answer in brief. Probably we share the answer. It is available, very neatly done. Very simple. Section 32. There's the new one is section 33 of the income tax. That imposes a twin requirement. There are two things that we need to see. One is the ownership, the other is the usage for business. In this case, the assessees did use the vehicle in the course of leasing business. So requirements of section 32 is fulfilled, notwithstanding if an assessee was not actual user of the vehicle. As long as the assessee lessor had the right to retain the legal title against the rest of the world, he would be the owner in the eyes of law. Here, the assessee is exclusive owner of the vehicle at all points in time. They are leasing the vehicles given to drivers. The assessee is empowered to repossess the vehicle, which is fine. The control exists with him. And the lessee was obligated to return the vehicle. The assessee had the right to inspect the vehicle at all times. So all the rights of the ownership rest with the assessee. And the assessee was therefore entitled to claim depreciation in respect of the vehicles leased out, since it satisfied both the requirements of section 30, namely ownership and usage in the course of business. Usage was only in the course of business. Usage was running taxis. I may not be having my own drivers, but I had partners. I pay them. So I fulfilled both the conditions, and hence the contention is not valid. This is highly supported by Supreme Court judgment in ICDS versus CID, which is given in the answer. I think you can quote that. And probably the concept is very, very simple. Here, I would always put it that your answer, you can actually find the answer purely on principle basis. Very simple. Looking at it from a basis of principle, I own the vehicle. I have given it on lease. I'm using it in my business, which is simple. I have a ride sharing platform. I've got an app. I connect drivers with end customers. The entire cars that are there are used for this very business, and they are fully depreciated. They are used. They generate income for me. Economic activities carried out. Simple logic on principles. Nobody can deny me depreciation. Forget your section. This is how you build up a case. Income tax cases or any law, for that matter, in my view, as long as the premise is built on very strong foundation of case law, a foundation of logic, foundation of facts backed by evidences, I think it will pass the test of law. Maybe you'll have to wait for some time. You'll have to go through some hierarchies from assessing officer to CIT or tribunal, but I don't think justice here can be denied. It's a question of time. So I think that principle followed here is what it is. So exactly 6:50 I started, I analyzed, and I brought this exactly at 7:50, exactly 1 hour and 20 minutes, 1 hour exactly to consider this case. We have seen enormous acts here, company law, we saw income tax, we saw business strategy, we saw business management, we understood GST partially, how does it operate for the industry. We understood gain creators, etc., pain relievers. We also understood how a comprehensive reading of the case study is very important for you to understand this case study in its entirety. So, Deepakji, you want to add anything to this session, to this case study?
No, sir.
Very good. So I think with this, probably, I've concluded the case study one, and every answer we have discussed in depth, gave the reasons, explained to you what how it must be seen, and then I'll probably take a quick, if it's all right, I'll just a quick 5 minute break. Just have a couple of, some water, and I'll come back. I'll start the session in about 3-4 minutes. Would that be okay, sir? If it's okay with you?
Yes, sir. Yes, sir. You may take a break, sir.
Just a 2 minute break for me, just to, clear my throat and again come back. Just give me 5 minutes. I'll
Yes,
be
sir.
back.
Yes, sir.
1952, I think I should join by 1956 or 57. Yeah. I will share my next thing. Yeah. So
You have to share the screen, sir, again.
I have to share the screen, right? 1 second.
Yes, sir.
Share. It's now sharing, right? It's coming, right?
Yeah. Can you please note it, sir? It will design everything.
Sir, you are on mute.
Yeah, I am on mute. I have reduced it. Now I'm.
Can you please share it again, sir? Share the screen, sir, again.
This is okay now?
Yes, sir. Yes.
Very good.
Sharing, sir.
So very good. I am getting into the next case study, which is on a very interesting sector. Probably people must be aware that we are going to discuss the next sector, which is auto sector. India's biggest employment generator, one of the next to software industry is auto sector. So we are probably targeting. I want one of the interesting things about this whole case study that I noticed, that we all notice, is the fact that it is very, very user. It gives awareness to aspiring chartered accountants of many things. And one of the things that it does is the fact that it is giving a complete rundown on sectors which are sunrise sectors, which are great employment generators, etc. In that context, we need to understand that the automotive sector, which comprises of cars, commercial trucks, commercial buses, two-wheelers, and now the latest fad, which is the EVs, are a massive sector by itself. So this company is about that. And we start this session now. I'll try to make it as interactive as possible, as thorough as possible. Of course, trying to, work the examples also. I'll give you some nuances of the examples when it comes to some numbers, because we need to, take you through that. JZ Limited is the company. It's the initial one is 7.1% is the Indian automotive industry is a cornerstone of the economy, contributing 7.1% to GDP. GDP is nothing but the total value of goods and services provided by the country. 49% to the manufacturing GDP, so which essentially means that India is a consumer manufacturing driven economy, not a capital goods manufacturing driven economy, which is why we are still dependent on Western economies like Germany, Sweden, Switzerland, Japan for high precision, high end manufacturing machineries to come into capital goods to come to our country. The fiscal year 21, the industry produced 22 million vehicles, and 80% of the total vehicles is dominated by the two-wheeler segment. So that's a very interesting statistics for you. India exported 4.5 million vehicles, showing its influence in the global automotive market. The government aims to make India hub for EVs, targeting a 30% EV adoption rate by 2030. As you know, EV is less polluting, although people keep talking about lithium batteries, the impact, etc. I would always go with government's view, and probably EV will definitely be the harbinger of future. You also find parallel to it, the government already bringing in small nuclear plants to ensure that clean power is generated and more power is made available to you. You are also seeing huge thrust on solar being given to ensure that you have ready power given to consumers with reduction on fossil fuels. Just to give you a perspective how the demand for EV fuels will also generate huge demand for power, and how government is going on a backward integration to ensure that such power is also clean power. And that's a reason why you also have hydrogen trains. So I'm just trying to give a linkage to you, sharing all these experiences to ensure that your thinking process, your thinking hat that you wear should have all these components. I know it's very difficult at that at the student age to do all these things, but try and read like this. You'll have as you go and experience, you'll find it amazing. And the great thing about our profession is our continual journey as a student. And I always pride in saying that I'm a continuous student of this profession. Raj Malhotra, founder of JC Limited, is a leading manufacturer of automotive spare parts. Envisioned company's potential during one of his visits to USA. In 1988, he anticipated the forthcoming boom in the automotive sector, particularly 2011 to 2020. Forcing this growth, he established the JC Limited to provide high quality, affordable spare parts for the Indian market. So the fact is that he is not a original equipment manufacturer. He's a spare part supplier, tier 1 supplier. The company is based in Gurgaon, Haryana, with manufacturing with Uttarakhand and Uttar Pradesh strategic located to leverage government benefit schemes. Fantastic. So you are in automotive sector, you are the original, either you are original car manufacturer. None of the car manufacturers manufacture any of the spare parts. They are all manufactured by somebody called as a tier 1 suppliers. Tier 1 suppliers means there will be some guy who is manufacturing engine, somebody who is manufacturing gearbox, somebody who is manufacturing seats, somebody who is manufacturing tires, somebody who is manufacturing brake linings, clutch plates, etc. So tier 2 is supplying to tier 1 and tier 3 is supplying to tier 2 and tier 1. So that is how the automotive industry is working. Extraordinarily cost conscious industry. In automotive industry, you must understand that pricing pressure is enormous because customers can't afford to pay high prices. You'll have to bring in a lot of innovation to keep your prices low, to keep your prices very, very competitive. So that's exactly what this company is all about. And it has, as I told you, India doesn't have capability of manufacturing advanced machinery. So obviously they're importing from Germany and Japan. JC employs over 1,000 technicians, engineers, and support staff dedicated to maintaining the highest standards of quality. The company follows stringent quality control and adhere to standards like ISO 9001, TS 16949 and 16949 to meet its products' performance, safety, and environmental regulations. Raj provides a technical vision. His sons Arun and Arjun and Karan have instrumental in driving the company's financial strategy. In addition to domestic markets, the company has a strong presence in 30 countries, which means your mind should now pause for a moment and say that, okay, I've got export sales. Very good. Then what do I have? I have a revenue from exports. Very good. Then I need to comply with certain FIMA regulations. That's how you should react. Okay, so I should be ready. As you read the case law, you have to be ready with the correlation of acts, which is what this entire IBS subject is all about. It is not about reading the sentences in isolation. It is about reading the sentences in cohesiveness. You have to be very cohesive when you read these sentences. It has a strong presence in Asia, Europe, Africa, North America. Major export destinations include UAE, Saudi Arabia, South Africa, and Germany and Canada. The company has established robust distribution network and partnerships in these regions, which means you will have partners, you will have their commissions, you will have their accounting, warehousing, accounting. The company has envisaged the boom from 21 to 30 of the EV market due to government's push towards Atmanirbhar Bharat with this PLI scheme, production-linked incentive schemes, which if you see the budget cannot be an isolated document. You will see PLI schemes there. The global shift towards India as part of the China Plus One strategy. I want to pause for a moment here and then definitely take at least a minute to make understand what is China Plus One strategy. Post-COVID, China did suffer. Everything got halted in China because COVID originated from China is what the people are believing. And of course, merits of it, I don't want to discuss. This is not the forum. So after that, what happened? Because of supply chain disruptions, everybody started thinking, is it right for us to depend on one country for our supplies? So as a part of de-risking strategy, which is very much a part of the, which is very much a part of their this thing. These people put up one more country and said that we should also have plant in additional countries. And in that option emerged India. Of course, we have some competition. We have competition coming from Vietnam. We have competition coming from Indonesia and all. But India, by and large, is looked favorably because of vibrant democracy, talent, and availability of capital. So this is what it is. To meet the burgeoning demand, JC Limited had implemented aggressive expansion plans, including construction of 2 new state-of-art manufacturing units in Gujarat and Tamil Nadu. The company has invested in R&D, collaborates with leading institutes, etc. The company, 2023 beginning, the company, to support its strategy, the company relies on skilled force who are considered backbone of the organization. In order to foster long-term loyalty and engagement, the company is offering ESOP scheme to its employees. As the company achieves its earning targets, shares will vest, granting employees ownership of the company. So immediately your mind is alerted, and you know there's an ESOP scheme, which essentially means there is an expense in the books, and I need to figure out what are the accounting treatments that I need to keep. I need to figure out fair value. I have to think of vesting period. I have to think of grants. I have to think of charge to P&L, etc. And the company, the employee should remain in service during the vesting period. Annexure 1 contains the terms and conditions, and it has been approved by the shareholders by passing a special resolution. The next para talks of JC's success is attributed to strong leadership, employee-friendly practices, training programs, and a culture that fosters innovation. The company provides competitive compensation, growth opportunities, etc. Despite challenges like increased competition, fluctuating raw materials, JC Limited has maintained a steady growth trajectory with consistent profit and a strong balance sheet. So there is a low attrition rate, high employment satisfaction. That's important news for you when the ESOP scheme is there. Guided by Raj Malhotra's principles and the financial expertise of the sons, Arjun and Karan, JC has thrived under the director's unwavering dedication and the collective efforts of its team. JC Limited looked towards the future. The director's global vision and the local roots served as a powerful combination, propelling the company's success in the competitive spare parts industry. JC is focused on enhancing its manufacturing processes, and the company has state-of-the-art production facilities that operate in 2 shifts on 9 hours each, 6 days a week. And you'll find that one of the critical production lines responsible for manufacturing essential spare parts has been closely monitored by the team. Over last 4 weeks, the following details have been collected for one of the important equipment: lunch break 30 minutes, other break 15 minutes, hours for planned preventive maintenance 15 minutes, breakdown maintenance 6 hours, setup change 14 hours, parts produced per shift 140, parts accepted per shift 131. So you have to understand that something is coming up on cost, something is coming up on strategic cost management here. These data are not given without any reason. So you have to be alert, just not a statistic data there. You have to figure out. And one important thing I'm drawing inference is from this is critical production line. There is one critical production line. So if I have to really, since you are an aspiring chartered accountant, I would urge you to think that if it is a critical line, what is my backup? If this production stops, what is my backup? All these things should come into play for you, and you will have to probably think, advising the management suitably to have an alternate plan or an alternate this thing, so that supply chain is not disrupted and you are able to meet the customer obligations. So year ended March 31, 324, March 24. In an effort to build a loyalty program, the company introduced ESOP. The ESOPs are designed to provide employees with direct stake in the company. By offering employees the opportunity to become shareholders, the company aims to foster a culture of ownership whereby every team member has vested interest in the organization performance. 1 year has now elapsed since the implementation of ESOP. It got implemented on 1/4/23. That is a date here for us. The program has proved to be an effective way to show appreciation for hard work of the employees and to build stronger ties between the workforce and the company. As of end of 23-24, earnings is 11% and 29 employees have left. So you can see here, 29 employees left the organization. The company expects the shares will vest at the end of March 25. That is 2 years, subject to earnings target achieved. The company expects the additional 31 employees will leave the organization by 24-25. That 440 employees will receive the shares at the end of 24-25. JC has been proactive in capitalizing on strategic opportunities for growth and diversification under the leadership of Arjun, under Raj and his sons Arjun and Karan. You see the ESOP scheme. One more point which is there is that there is a word here. The employee should remain in service during the vesting period. Annexure 1 contains the terms and conditions of ESOP, has been approved by shareholders of positive. So there is an annexure 1. You have to understand that you will have to read this annexure 1. I'm pausing for a moment. I'll go back again and reading it. So I'm just trying to see how you go back and forth, even if you miss something. JC has been proactive in capitalizing strategic opportunities for growth and diversification under the leadership, which I explained to you. It has acquired a company. It has acquired a building from Moon Limited, another reputed manufacturing company, for a cost of 1 billion. That is 1 crore on 1/4/2020. The building has previously been used as a factory, was accounted under the cost model. So very good. So the initial accounting is in cost, not in fair value. At the time of acquisition, JC management, guided by the financial advisors, estimated the building to have expected useful life of 10 years, which means 10 million divided by 10 years is 1 crore, is 1 million is a depreciation charge on a yearly basis. It's simple. I'm giving you how you plot your answers and how you keep on making your answering so easy and comfortable for you as you move along. Then initially JC Limited had plans to repurpose the building and integrate it to their existing expanding operations. 2 years down the line, the company faced a significant decline in one of the products demand. As a result, the need for additional factory space became redundant. Recognizing the opportunity to generate alternative revenue streams, Arjun and Karan, known for the strategic foresight, proposed renting out the building to a third party. On April 1, after conducting a thorough market analysis, obtaining necessary approval, JC successfully leased an operating lease agreement. So it's not a sale, it's not a financial, it's an operating lease to a building to a reputable tenant called ABC Industries. At the time of leasing, JC's valuation experts assessed the fair value of the building to be 8 million, reflecting the current market conditions and the building conditions. In accordance with company's accounting policy, JC Limited adheres to cost model for recognizing its owned investment property. Lot of weighted sentences here. I will definitely discuss it as we move forward. Pause for a moment. Put it in your mind. Okay, it adheres to cost model for recognizing its owned investment. The date of acquisition is 1/4/2020. I'll leave it at that. Then let us move to the next one. With Arjun and Karan strategy guidance, keep a look at the time. You have already spent 14 minutes. You've got another maximum 3 to 4 minutes to complete this reading. With Arjun's and Karan's strategic guidance, JLC Limited is well positioned to capitalize on emerging trends, and it has 3 globetrotters were going on. This is more from a marketing perspective. Despite the global directors remain in Gurgaon, understanding the importance of maintaining strong presence for legal compliance and organized stability. They are dedicated to developing business opportunities and accordingly visited USA and Canada. Raj visited USA and Canada, Mr. Malhotra. During his tenure, he has met potential business ventures partners. He is preparing to come to India after 4 months. During his stay abroad, he acquired various items, and being a responsible business, is mindful of customs regulations. So, customs regulations is a word which will strike your mind, and you have to keep that in your mind. Park it in a mind mapping. This is called mind mapping technique, where you park it in the mind and say custom regulations. Well, he sent an email, annexure 2. So already we have annexure 1, which is ESOP. We have got annexure 2, which is probably on custom regulations. Let us see what it is. And I sought guidance from his finance head and tax head, who is well versed in legal affairs, financial matters. Year 25, 24 year end is over. There are many events. ESOP, then Raj Malhotra's visit to US and coming back, then investment property, a building getting converted into investment property. We'll see the answers later. So you'll have to identify these events. So 24 is over, you have parked it. Then ESOP, you have got some vesting. So 4 major events. Year 25, Gumbar and Associates have been appointed as stat auditors for JC Limited for 24-25 with strong track record of excellence. Gumbar and Associates have experience in auditing. So this is a general para. It is 2 years since the launch of ESOP 23. At the end of 24-25, the company earnings is 19%. Therefore, the shares did not vest. Only 29 employees left the organization during the second year. Company believes that additional 23 employees will leave the third year. During third year, and earnings will further increase so that performance will be achieved in 25-26. So I think so we'll have to go to annexure and figure out all these statistics. From a regulatory perspective, additionally, it is important to note that JC Limited consistently maintain high standards of corporate governance overseen by Arjun and Karan. The company's financial statements are audited by a reputed firm, ensuring transparency. In a strategic move, JC Limited was considering market expansion through acquisition of BM Auto Limited, a company renowned for its stronghold in the global automotive sector. Arjun and Karan, with their financial meticulous analysis acquisitions potential benefits, they anticipated that combined resources and strategic acquisition was not about expanding, but about integrating innovative technologies and best practices from BM Autos into JC Limited. I want to pause here for a moment and explain to you that acquisition need not only be for numbers. Very, very important. An acquisition can be very, very strategic because it brings technology, because it brings innovation, because it brings something which is complementary. It is something that you don't have. So you please take some efforts to get into some of the acquisitions which have happened, some buyouts which have happened, and you find very strategic reasons. Like a pharma company which is manufacturing cardiac drugs will buy out a company which is manufacturing dermatology drugs because it doesn't have space and it doesn't have presence in dermatology market. So like that it goes. The company has 25 lakh shares outstanding. EAT, earnings after tax, is 50 lakhs. BM Limited, BM Autos Limited has 12 lakh 50,000 shares outstanding. The current market was at 10. EAT was 12 lakh 50,000. After extensive deliberation, BM Autos agreed to get acquired, under which JC Limited would offer the current market value in a stock swap exchange. This acquisition was seen as strategic fit, enabling JC Limited leverage BM Autos performance and enhance its competitive edge. The acquisition promised to enhance shareholder value, improve operational efficiencies, and foster a more resilient business model, well equipped to navigate the complexities of a global market. So there is the word important for us is stock swap exchange. Okay, so we'll have to figure out what is the ratio. Your mind should immediately think of ratio computation. And employees are key assets. So for many years, they paid bonus to its employees, recognizing constructive obligation to reward their hard work and dedication. Key word here, employees, bonus, constructive obligation. So it's no longer a mere contingent liability, it's a constructive obligation. JC Limited discovered that the provision for constructive obligation for payment of bonus to selected employees, a material amount. It is material amount. We have to pause and read that particular phase in isolation, which was required to be recognized in the annual financial statements for the year ended 31 March 23, was not recognized due to oversight of facts. So 31/3/23 accounts has gone. You are now reading 24. 23 accounts has gone without this charge in the P&L. This is a constructive obligation. It is a bonus. It's a P&L hit. The bonus was paid during fiscal year 31/3/24, and it was recognized as expense in the financial statement for the year 24/25. So they paid the bonus during the financial year ended 34 March and recognized expense in the annual financial for the year 24/25. So JC Limited has expanded its presence by acquiring major stake in a Singapore-based company, and they acquired 54%, which became a subsidiary company. Rajesh Sharma, one of the directors, was instrumental in the acquisition. His vision for international expansion aligned with the company's growth strategy. Dr. Sunita is residing in Singapore, was appointed as a director in SPL. Sunita's extensive experience in the region made her a valuable asset to SPL. She was appointed Mantri Remuneration SGD 5022, and appointment was a strategic decision at ensuring strong leadership and effective governance at SPL. Her presence in Singapore facilitated smoother operations and stronger ties. The expansion into Singapore not only broadened JC's market reach, but also reinforced its position as a player. Gumper and Associates, with a wide range of industries, provide tailoring audit solutions. The company's quality reflected in internal process, etc. CA engagement partners concerned about non-verification of physical inventory. That is a key matter for non-verified physical inventory. And management of JS Limited has not undertaken verification of inventory at regular intervals. They constitute 30% of the total assets of the company. Due to due to non-maintenance of adequate inventory records at the factory, audit team could not undertake the physical inventory. Hence, the value of inventory could not be verified. So, this is a very critical audit point. Just read it and pause it. So, 25, just to, if I were to put the scheme of events, new auditor appointment, so governance issue I will take care. I'm just trying to give you how I will view as a chartered accountant. It's very, very important for us. Then I look at ESOPs, which have to be accounted again for 24-25. Then there's an acquisition. Then we have a constructive obligation which got missed out of 6-7 events. So you have to just park it saying, okay, these are the events. And what we'll have to see what are the questions which are going to come. Now you build your case study. And then you have 2 annexures to read. So annexure 1, I'm not going to read in full because of paucity of time, but I want to discuss all the answers for the next half an hour. You find some very interesting grants are there. They shall be enforced to the earlier of 31 March 26, etc. And then vesting conditions are there. First year, it will vest if the company earnings is 15%. You please go back to your sheet and then you'll find it at 11%. 23% over the 2-year period, you will again find 23 in 2 years. What is the number? You have to just go back. All these things are memory. You have to mind map. And then third year is 29% over 3-year period. And the fair value at the grant date is 122. That is the grant date is the date on which it was first granted. For annexure 2, very clearly we mentioned that Mr. Raj Malhotra had gone to US, is coming back, and he wants to bring the following items for you: personal effect items, laptops, jewelry, music system, etc. And he wants guidance on the customs regulations. So obviously, so this is how it is. Very, very beautiful case law covering. If I were to pause, it covers accounting, it covers Ind AS, it covers acquisition, acquisition accounting, it covers ESOP accounting, it covers custom regulations, it covers directors appointed. There's a company law requirement which is coming up. It does talk of a very potential audit issue. So, just by reading this for 1 hour, for one time, so many issues you are expected to identify. Please identify, park it, write all these pointers because you'll find answers elsewhere. As I told you at the beginning, this is conceptual testing paper. It's not a paper where you are expected to give right answers. So don't worry about negative markings are not there certainly. Definitely your approach is what people are going to test. So multiple choice, let us get into multiple choice questions. JC Limited has previously intended to use the building for its business operations. However, due to change in business environment, the company leased the property to ABC Industries. The value at which the investment property should recognize and calculate. Determine the value at which the investment property should be recognized and calculate the gain or loss to be recognized for building classification asset on 1/4/24. 10 million and no gain and loss, 8 million and gain of 2 million, 4 million and loss of 2 million, and 6 million no gain, no loss. Very simple. You bought the asset on, I will give the answer, very, very simple, straightforward. Verbatim, we can do it. Bought the asset on 1/4/20. Asset was 4 years with me. It was assessed at 10 years when it was bought. So 1 million is the depreciation that I charge every year. So 1/4/20. So 2021, 21, 22, 22, 23, 23, 24. So 1/4/24, the value has come to 6 million because 4 million is charged as depreciation. Now, if you go back to that para, you would find, I'm talking from memory, I'm not referring any book. They adopt the cost model. When they took the initial value, it was done at not fair value, it was done at cost model, because fair value means then you will have to, adjust, route it through OCI or route it through P&L, etc., as the case may be. But here it is through, it is a cost model. So what you have to do is at cost model, you have to transfer. So if it is a cost, your answer is staring at you at option number D, which is 6 million and no loss. And I'll give you some answers, the reasons for those answers, and you will find it extremely useful and understand the same from that perspective. Very simple. When you're looking at it, as per Ind AS 40, initial recognition should be at cost only. As per para 59, the owner property and inventories don't change the carrying amount, and they don't change the cost of property for measurement and disclosure purposes. So it is reclassified only. So the entry is simple. It will move from PPE onto your investment property, and cost model is what is recognized and what should be your this thing. At best, what you require is a very detailed disclosure in the notes and accounts. I hope the answer makes sense for you. Okay. Now, question number 2, which is probably very interesting, very important. There is, of course, you are requested to compute the custom duty payable by Raj Malhotra with reference to baggage rules 2016, assuming the effective rate is 38.5. Please compute the cost. So I'm just extrapolating the question. We have to compute the duty payable by Mr. Malhotra. Okay. So we'll have to probably make a little bit of detailed answer here. Your answer should be baggage rules 2016. You will urgently like to refer. You are having the option of open book. Baggage rules, what do they say? And I can probably, give you snippets of what baggage rules say just for use. Baggage rule says that there is a general duty allowance. The latest amendment is there. Let me highlight that to February 2nd, 2026. The government raised the general baggage, general duty allowance from 50,000 to 75,000. Your study materials still show old value 50,000. So be wary. This is what the beauty of this course. You have to be aware of the latest amendments, 50,000, 75,000. Then, of course, you will have to probably another major amendment they brought is that jewelry is based on weights, not value. And, more than 1 year, you can bring in some jewelry. Less than 1 year, you cannot bring in. So here, you go back to your question and you'll find that Mr. Raj was, if you go to Annexure 2, let us go to Annexure 2, you'll find that he's bringing in personal effects of 59,000. He's bringing in jewelry of 67,000. He's bringing a laptop of 37,000. He's bringing a music system of 1,25,000. So if you go back to this answer here, just to give you clarification, the way it's done is you probably have to, see what are the exempt items. Personal effects, 75,000 is exempt, 50,000 will put it exempt. Then jewelry, 67,000, certainly not exempt because he has not stayed there for 1 year. Then laptop, if you're more than 18 years, you're allowed to carry one laptop with you. So that is an exempt item. Then you have got music system, which is not exempt item, 1,25,000. So please add these two items, 1,25,000 plus 60,000, and you deduct your general baggage allowance, and you will arrive at a value of baggage liability duty. And if you apply your percentage of 38.5, you arrive at an answer of 54,670, which is option number 4. So you build up a case like this. You may not get the right answer sometimes, but as long as you are writing that personal effects of 70,000 exempt, this is my computation, people will give you marks for the nice steps that you have put. They require a nice computation, and they will expect a very professional answer. Since you are addressing to a MD saying so and so, welcome back. I would just output, sir, basis your mail, the following are the rules which are latest. Kindly follow as under, and then you conclude saying this amount of duty liability which could be expected to be paid by you when you are entering into the shores of this country. So that's how you probably conclude this. The third question is, I will probably park it to the last, the ESOP plan, and one more question is there on the share swap. I'll pause it for the last one because it's more computational. But definitely I'll give you hints how you can get it out. I would probably take you to question number 4, which is probably the JC Limited aims to enhance its manufacturing efficiency and productivity by reducing breakdown losses and defective products. To achieve this, management seeks to assess overall equipment effectiveness, a key metric for evaluating the performance of manufacturing process. You are required to calculate the overall equipment effectiveness. Overall equipment effectiveness is a key barometer for us to figure out the health of the equipment, number 1. It is also a barometer for us to figure out, should I plan for a second critical machinery. It is also a barometer for my operations effectiveness. It is also a barometer of efficiency for me to determine how my repairs and maintenance is happening. It is also a barometer to determine how my final product quality could be there. And just I'm correlating this with some practical examples. You find suddenly some of the examples is automotive industry. To what extent, I do not know. For you people have read the papers, but I want to tell you, suddenly, you'll find one item, news item. Maruti Limited recalls 14,000 cars because there's a defect in a particular product. There's a defect in a particular product. And they will give to the general public that so-and-so product, so-and-so sold date, so-on carries this defect, we will change it for you free of cost. You will find this news item will be there, and the individual buyers will be there because the car companies track the customers by the chassis number and the engine number, and so they know what are the chassis number, engine number sold between particular period to particular period across all dealer locations. They will communicate. They withdraw the part. They will ask the customers to come to the showroom, and they immediately change the product and send. So this just correlating going back, you will find probably once the company investigates, they'll find that the overall equipment effectiveness was very, very poor with a very low percentage. Probably maintenance is a problem, or it is not performing output. It was, it has not been calibrated. It has not been precision engineered. There'll be so many factors. So here you see this with this case law. Don't look at it as a mere number. Getting the number is hardly a minute's job because all you have to do is you're actually computing a formula. Overall equipment effectiveness is just nothing but a formula between availability into quality into performance. This is how it is. A very, very simple computation. Availability to performance and quality. But more importantly, we'll have to go back and give theoretical inputs like this if you're aspiring chartered accountant. So the idea is to get you there. Please prepare this little thing and then get into your computation. I don't have any presentation show for this computation, but I'll explain to you. Availability is nothing but ratio. Availability is what is availability? Is total is an actual runtime divided by the planned production time. That's my availability percentage. And performance is nothing but the actual output. Very simple. Performance is nothing but the actual output divided by the total theoretical output. It is then the quality is nothing but good units divided by total number of units produced. One para exclusively answers these questions. One para, if you go back a little bit, now you know which para I'm talking about in the year 25. They said they had a very critical line. And that critical line had all these answers. And then you will find that these answers were more into number of shifts, etc. So my recommendation is that what you need to do for the answers is you will have to calculate the number of shifts, 2 into 9 into 6, 48 shifts in a week. In a week, all these things are very simple. Then unplanned hours. What is unplanned hours? Something which is not planned. There's a breakdown maintenance. Then once the breakdown maintenance happens, what happens next is setup charges and then power failure. Nothing is planned. Unplanned maintenance you have to compute. That comes to some 1,440 minutes. You will find that. And then total hours lost. What is my total loss hours is, over the 1 month is how much of minutes I've lost. You will find the total minutes divided by number of, you will say that I've lost half an hour every shift. So my availability is nothing but, my planned production is nothing but my available time minus planned this thing, and my lunch and my availability ratio is unplanned this thing by total planned hours, 450 by 480, which is 93%. So my machine is not available for 100% of the time. It's available only for 93% of the time because there's maintenance, there's breakdown. Here, to give you practical insights, it's easy to compute this, but the practical insight, I'd be very much concerned as an analyst, chartered accountant, if I find unplanned maintenance is very, very high. And power failure is not in my hands. It is government. That means I don't have a alternate power. I don't have DG. Maybe you should think whether you need to have DG set. I'm thinking like a business strategist. I want you to round your thinking like this so that, it will be very useful, very impressive. It will be when you answer like this. Then performance ratio is nothing but standard time into actual time. It says that, it is 420 minutes and actual time is 450 minutes. You'll find that. So performance is nothing but, um, total standard actual time by the standard time. And then the quality is nothing but 131 is the production, 140 is ideal. That's what they say. So I got 93% throughput. Automotive industry, just to again give you some knowledge, it operates on something like ppm, particle per million. So they say, when you go to automotive companies, they'll say, sir, what is your ppm? That means out of 1 million parts, what is your deficiency? Some people will say, sir, is it 1 ppm? That means only one part out of 1 million is deficient. That is a high level of accuracy that these companies will maintain. That's something very interesting. I'm just giving you some insights. How does the industry operate? Sharing some very practical knowledge. Somebody will say 15. If it's 15 ppm and the ppm is going up, that's a warning sign for you that there is something inherently a problem and you need to pick up those points. So as a budding chartered accountant, please be wary of these things. So overall equipment effectiveness, if you compute, is coming to 93.75 to 93.35 to 93.57, which is 81.8. 81.81 is the correct answer. So yes, you have to compute. You must get the answer near to that. Accuracy, don't worry. As long as you get these concepts right, I would request that you should proceed to the next question, which probably is a little more easier question. We'll move to a company law question. Whether JZ Limited was required to pass a resolution with respect to appointment of Sunita in considering a related party transaction. Here, as I told you, the moment you were discussing that para, I said there is a potential company law issue which is coming up, which is, dealt in section 188 of the Act, where, we see probably, where we can say Sunita was appointed. No, whether you require special resolution, whether you require to pass a resolution with respect to appointment of Sunita in SPL considering a related party transaction. No doubt it is a related party transaction. As such, appointment did not amount to appointment of Sunita to an office of place of profit in SPL. Sunita, yes, was a related party to JC Limited. She would be drawing a monthly remuneration exceeding 2.5 lakhs in a subsidiary company. Even though Ms. Sunita was a related party to JC Limited, she would be drawing remuneration from SPL, its subsidiary company, not JC Limited itself. No such provision exists with respect to related party transactions are not applicable in relation to foreign subsidiary company. So what is the answer? Which is the correct answer? Well, I think here we'll have to know, just because it is a related party, it does not make a transaction void ab initio. We'll have to probably look at things and then take an evaluated call. I would again here go with principles. I'm not definitely section 188 is a beautiful section, gives you what is office of place of profit. You'll have to again go to Companies Act definition section 274 for relative. What is a relative definition? And then here you have to see that what is the experience of Sunita. She has good control in Singapore. She has been a citizen there. She knows the rules, regulations. And this company is now wholly owned subsidiary. So you have fairly good reasons to say that, there's no need to pass any resolution. This is not an appointment to a place of, to an office or place of profit in SPL. It's only nominal, it's only a remuneration. Office of profit means something else goes beyond salary and remuneration. That is office or place of profit. So answer is A here. And the reason that, of course, there is always a detailed reason given here. She is the expression of section 188, they say, I'm just giving the reasons as enumerated by the CA guide. Section 188, along with Rule 15, contains provisions which regulate related party transactions. The transactions to be entered into as contract or arrangement is for appointment to any office or place of profit in the company exceeding 2.5 lakhs. need approval by order resolution is required. The expression office or place of profit means any office or place where such office is held by director, the director holding it receives from company anything by way of remuneration over and above the remuneration to which is entitled by way of salary, fees, commission, etc. Where such office is held by individual other than director or by any firm, the individual firm receives anything by way of commission, remuneration, rent-free accommodation, otherwise. Here, Ms. Sunita is a relative. She was appointed as director in JC Limited, subsidiary SPL for a monthly salary of 3 lakhs in 24-25. The compensation received as remuneration constitutes a sole remuneration. Consequently, her appointment did not constitute officer place. They should not receive anything over and above the remuneration. That's an important point. So therefore, JC Limited was not required to obtain any approval from the shareholder. So these are the questions by parking. I have one parking question that I will come back a little later on ESOP because it requires some competition. I need to take you through, but I'll love to discuss the descriptive ones, which are more from principle angle. Very, very important for us to discuss the principles involved. Yes. The descriptive questions here are, you are required to analyze whether the situation relating to constructive obligation for payment of business is an error requiring a retrospective restatement of comparatives, considering that the amount is material. So I think this is a very, very critical question. And the answer straight away is that it is without getting into what the standard, I mean, Ind AS 8 deals with it straight away. Well, we know it's an error. Well, it's an error. This ideally should have been captured in 23. The year ended 23 itself. It was not done. It got provided for in 24. Of course, expensed off in 24-25 against the provision. That's what I would think from the answer is right. Amount is material, which means we have to do a restatement. Okay. This is where the biggest challenge for auditors keep coming. You have to be very, very careful. Nowadays, NFRA also tells you that you cannot have an accounts with uncorrected misstatements. It's the latest NEFRA circular which is coming, which says that you need to, sign off accounts with corrected misstatements. Nothing can be left undone. Maybe very, very material, very, very materially small amounts, immaterial amounts can be left it. You can call it uncorrected misstatements. Generally, when I make a presentation, I always tell what is the corrected misstatements. I also tell people what are the uncorrected misstatements. I also tell people how we have corrected it, how the journal was passed, etc. So here, definitely it's a material misstatement. We'll have to definitely restate the comparatives. We'll have to, go back to the 22-23 opening balance sheet. You'll have to touch the reserves, because to that extent you got to touch the earnings. So paragraph 41, I am reading the detailed answer. This is the answer to the descriptive question. As per paragraph 41 of Ind AS 8, errors can arise in respect of recognition, measurement, percentage. Always in every financial statement, I always tell people, please assess 4 things. There are only 4 things we need to focus on: R&M, P&D. R&M is nothing but recognition and measurement. The other is presentation and disclosure. Here, it is more about measurement was right, recognition was wrong, presentation disclosure is also impacted. So that's how you look at it. Financial statements do not complete the Ind AS if they contain either material errors made intention to achieve a particular presentation, financial performance or cash flows. Potential current period errors discovered in that period are corrected before the financial statements are approved for issue. However, material errors are sometimes not discovered until a subsequent period, and these prior periods are corrected in the comparative information. Paragraph 40A very clearly says, an entity shall present a third balance sheet as at the beginning of the preceding period, in addition to minimum comparative financial information, inter alia. Retrospective restatement has a material effect on the information in the balance sheet. In the given case, expenses for the year ended March 31 were understated. Liabilities were understated. Expense and liabilities were understated. And expenses for the year 24 March was overstated to the same extent, because the recognition of expenses in that year. To correct the above, the financial statements for the entity March under 31/25 should be, we should restate the comparative amounts in the P&L, that is for those March and the present the third balance sheet at the beginning of the preceding period, which is 22/23. That is 23/24, we'll have to go back to 23/24 on that day, wherein you recognize the provision for bonus and restate the retained earnings. You have to go touch the retained earnings because the earnings for 23 has to be corrected, and then you will carry it forward and make that correction, and then that one's restate itself. So that's how it is done. You do the restatement part of it. So I think this is something that probably is very, very important for us from an accounting perspective. Then I will, before I touch the shareholding part, I also would love to discuss the audit part, which is the auditors. We are all career auditors. Most of you will probably be looking at auditing itself as a great career option. So I think it's important for us to think about it, and probably I would like to share some practical experiences. How should auditors deal with this, with the issues in the audit report? What are the issues? Mind mapping. What are the key points? Non-verification of inventory. Okay, non-verification. Second point, I'm just memorizing straight. 30% of the total assets are inventory. Third point, management has not done verification for some years. So what are the assertions you are having a challenge here? Very, very challenging situation for auditors here. You are having a current asset. And what are the implications of this? In Caro, you got implications in Caro. You got implications because you got to report the inventory to the banks. Very, very important. Quarterly statement should go to the bank, right? Every quarterly statement should go to the bank. How do I know that what I'm submitting to the bank is correct? How do I give comfort to the bankers, because they are the biggest stakeholders in my company? Okay, how do I give credit? You are talking about governance. You are telling that this company is very good. Raj Malhotra and his children are looking at governance from a very critical perspective. You are very, very upbeat and bullish about it. You have a very holistic situation here. So what you do is, there is a standard on auditing on evidences. There is another standard exclusively on physical verification inventory. So you have to go back to your report, and then what do you do? What do you give in the report? You give an assertion that this particular audit that I'm conducting is done in accordance with the auditing standard issued by the Institute of Chartered Accountants of India. You also give an assertion that we have not found anything contrary, but here we are having a major audit issue. How do you logically take it? You make an audit memo. An audit issue memorandum is made. Audit issue, heading 1, then value. Third, what are the acts affected? Companies Act affected. Caro affected, because Caro is reporting with the linkage back to Companies Act. I'm giving a very broad answer. Then valuation. What are the assertions? Valuation, rights and obligations, existence, everything is affected. Assertions affected. Then next, what does standard say? Sufficient, appropriate audit evidence should be available. SAAE standard talks of. So you don't have sufficiency. You don't have appropriate audit evidence. So can you now go ahead and give an opinion? You cannot. So sufficiency is affected. Appropriateness is affected. So you have that standard also. Then you are expected to follow standard of auditing with respect to inventory. Physical verification. You have not done it. You have not complied with the guidance note on physical verification inventories issued by the CA Institute, your current institution, my alma mater. It's very detailed guidance note is issued. Generally, what do? We generally train students, articles, to have a detailed verification before they go. That's not possible now. So, major audit issue. Conclusion, what do? Amount is material. So you have to figure out, I have different answers for the situation. One is if it's material and pervasive to the financial statements section, then you have to go to standard of auditing 701, where it talks of various types of reports, which is you have got unqualified report, got a qualified report, you've got disclaimer of opinion, and you've got adverse opinion. Here, the correct answer for you would be a disclaimer of opinion because you are unable to conclude on this matter because you don't have evidence. When adverse will come, adverse opinion will come when you have all the evidences, when you garnered all the evidences and to come to conclusion that these financial statements do not reflect a true and fair view, at the time adverse will come. Now, disclaimer of opinion will come. You have to disclaim these accounts. That is how auditors should deal with this issue. Conclusion, disclaimer of opinion, and then you disclaim these accounts. So there are other implications of disclaimers. I don't want to get into it. That is not the core subject matter at this point in time. But just to give you a perspective that this is how this answer will end with respect to this. So you are unable to obtain sufficient and appropriate audit evidence and could be material and pervasive. And auditor should say, and CORO also auditor should say that physical verification, they should say that is inappropriate and they should give a qualification. Then we are unable to comment on it. And they should also say that we are not able to comment on the correctness of the statement submitted to the bank. So 2-3 points you will add, and then you should conclude this matter. So I think that's how this is done. So moving on to question, I probably want to go to question on EPS. I have another half an hour. Mr. Deepak, our deputy director, has told that I must invite you to the session by about 9-10 or something. I'll definitely do that. I'll give the chat box the link to Zoom. Welcome to the session. I'll try and probably give two broad answers with respect to ESOP and your exchange competition, so that you are able to understand how it is done more from a concept perspective. Go to item number 3. That's the question in the part. Determine the expenses to be recognized in statement of P&L as at the end of second year in respect of opinions granted to employees under ESOP Plan 23 as approved by shareholders of JC Limited. So second year end means I have to talk of here. I'm just going to I'll keep the answer in the question, so that this is a question that you are attacking. Very good. So here expenses for 23-24. The answer is of course the correct answer is 723.86. I'll give you excellent working for that. You'll have to probably work what is the cost that you need to charge for every year. You'll have to probably put it ESOP charge would be nothing but your total number of employees and the number of shares vesting in them to fair value. You have to compute the cost for 23-24. The vesting is expected in 2 years, so it's 1/2. So you get an amount which is 26,84,000. 26,84,000. Then vesting period ends on 31/3/20, which is again 2 years. You have numbers which are very clear. Employees start with 500. Then you got employees who have actually resigned is 60 as of 31/3/25. That is 29 employees and 31 employees. If you see your paras, you will find 60 employees left, which is starting with 440 employees. That's how we get at 26,84,000. 440 into 100 rupees into 100 shares into 122 fair value into 2 years vesting. That is 23, 24, 24, 25. So it's 26,84,000. Cost for 24-25 would be, you have 23 employees actually who have left. You already have 29 employees who have left. That's what you say. So you start with 4 actual employees who are left in March 24 were 29 employees, which makes it 471. So 471 minus 52, that is the total employees is 419 into under fair value into 100 into 2/3. 3-year period is completing. So you arrive at an amount and then you get this computation of 723, 867. I'm sorry, I'm not able to show this working on the screen. But I can definitely, tell you that this is probably just pure arithmetic, nothing more than that. To be very fair to the institute, it is pretty straightforward and simple, not quite complicated at all. And all that you need is that concept. What are the concepts? ESOP is a concept. Expenses must be charged off. Computation must be verified by us. And then, what you need to see is you probably need to write little elaborate answers. Go to annexure 1, read it, and then you say that yes, this is the parameters achieved. Company have not achieved the parameters, and then but you have to say at the end of second year they achieved this. So you can say what is the expense to be written off, and then you finally see what is the charge you have to take in 24, 25 when probably the scheme is come to an end. So these are the key concepts that you'll have to keep in mind when you look at it from that perspective. And the last question that I would like to take would be your, the merger transaction with BM Autos. Here they say, what are the answers? They want to determine the number of shares of JC Limited, the number of shares that they're going to issue to shareholders of BM Limited as per arrangements entered. You have the numbers with you. Some of the numbers which are very important. Then P ratio computation is there, P EPS is there. So some of the computations that I can probably walk you through is market price is nothing but P into EPS. The formula for obviously the formula for P is market price divided by EPS will give you the price earnings. We will give you the price earnings ratio. MPS by EPS will give you the P ratio. And you are expected to compute. So let me determine the number of shares. You go back to the BM Limited. You found that it's a strategic acquisition. So some numbers are already there. And I would tend to think that you probably, this is the thing. Yeah. There's a stock swap exchange which is happening. So this is seen as more a strategic fit, enabling JC to acquire, to leverage BM Autos' market presence and enhance its competitive edge. You find that the formula for that is what is the new exchange ratio is market price of BM by market price of JC. His second answer is 6.4 by 20. So you'll have to give 0.32 shares of JC Limited to BM Limited shareholders. Post acquisition, you are expected to maintain the same EPS. The EPS is 2.16. It comes. The desired ratio is exchange ratio is post acquisition earnings by post acquisition EPS of by pre acquisition EPS of JC Limited, and you probably wanted to maintain same ratio, so you'll have to make the additional shares to make it equal, so that you get the same EPS, and the answer you get is 6,25,000. So that is the answer which is also given. You kindly have to go through the answer in the answer section of the case study which is available to you. I'm sorry I didn't show that to you, but if you want, I can definitely quickly show you that. Maybe it will be helpful to you so that you appreciate all these nuances. Let me just pause for a moment, and I will just stop sharing this, and I'll probably share the answers which are available. You'll have to just bear with me for a second as I do this to you. Give me a minute, and I will just come back, because we have some more time to go through these answers in depth.
Sir, you may share code to students so that students can join, sir.
Share the code now? Okay, fine. I will share
Yes,
that.
sir.
Yeah, I'll share the code. So I will have to share the code in the chat, right, Deepak ji?
Yes, sir. You can tell the code number. or you can
Okay.
write on the screen, or you can tell the number.
Yeah, I'm telling the code number now. I'm taking your message and I'll read it from there. I'll just probably type it also if it's possible. Let me type it. I have a chat box here, right? It is uh, yeah, meeting ID. Yeah, I think yeah, meeting ID. Final course, everyone. Actually, to everyone, sir, I put it. Everyone in meeting. I'm just typing this. Type the message here. 849 0792 and 2305. Yeah, yeah.
Sir, you may complete remaining part of case study. Meantime, students are joining, sir.
Okay, I think I will definitely, complete the. I'll probably like to show that this thing. Yeah. Yeah, unmuted, and yeah, I also. So as I told you, the fair value, the computational ESOP expenses 23, 24. The answer is here. I thought I should just show you the answer as it has come. This thing, so that it will be very useful for the students to appreciate uh, this particular aspect.
Sir, your screen is not visible.
Yeah, I'm just coming. Yeah. Okay, sir, now? Yeah.
Yes,
Skin is visible now, right? It is visible. Hello?
yes, sir. Screen is
Very good, very good, very good. So expense for 23-24, if you see, it is expected number of employees at the end of the vesting period of shares per employee into fair value, the proportionate vesting period, which is 1/2, which is, they want the scheme to end by 25. If you see that line, which is very important, 1/2. So 440, 60 employees left, 29 plus expected 31, 440 is the number. For 24-25, expected number of shares at the end of the vesting period into what is the expected number at the end of the vesting period? That's very important. So obviously, at the end of vesting period is 26 is vesting period ending. At that time, we will find that 29 employees have left into shares, into fair value, into proportion vesting period is 2/3, which is 24-25, 25, 23-24, 24-25. So you already have to deduct the charge which has been made, and the balance amount only can be recognized, which is 723,867, which is what is the final expense that you have to put in. And the next one, probably, on the share swap also, I'll just guide you into the answer. I personally feel you'll have to write a little more reasons here, but I think this looks okay from an exam point of view. I'm okay. This is how probably, I was talking to you about the calculation of the overall equipment effectiveness. You find that how they computed the unplanned loss, then planned production time they have, then availability ratio, and then of course the OE is nothing but the multiplication of this availability into performance into quality, which is how you arrive at this 81.87. And a simple thing, if the OEE number is coming below, is going down on a year-on-year basis, please expect a warranty cost to go up. I'm giving a very practical example. It is not good for you also to have a lower OEE. It should be an excellent ratio for you. And then ideally, automotive sectors and all, people expect this ratio to be nothing less than 95% plus. They don't expect anything less, because the turnaround time is very heavy, and one part not availability can affect your sales by the car sales company. I've explained to you in depth about Sunita's, that no resolution is required because she's right. It's not an office of profit. Office of profit concept will come if you are paying anything over and above the normal remuneration. So that is what it is. That's a concept here. So when you read also, please read it from that perspective. The last one I would think is this particular example of shares to be issued to the holders of BM Auto. You'll find that it is. I have to issue the first case 6,25,000 shares because I have to maintain that. Then the revised PE ratio is. They say in the exam, in the statement, they're given 6.4. So you are telling it 6.4. EPS revised market price is 6.4. Exchange ratio is, market price, revised market price by market price of JZ, which is 0.32. So you'll have to issue 0.32 shares of JZ for every one share exchange ratio. And the third one, desired exchange ratio. You want a desired exchange ratio. You want to maintain the same EPS. So you want to maintain the 60-50 divided by 2 rupees. You'll have to give 31,25,000 shares. You already have 25 lakh shares, so you'll have to give additional shares is 6,25,000. So this is how the exchange ratio is fixed, which is nothing but 625 divided by 12, which is 0.5. So for every share of BM, you'll have to issue 0.5 shares of JC to make it arrive at the same this thing. There's one more concept, the reverse bid here. Simple concept, reverse bid. Unlisted, highly profitable company is getting merged into a SIC listed company is a reverse merger. Simple one liner. ICICI Bank was a very small bank, but ICICI Limited was an unlisted financial behemoth with assets running lakhs of crores. They didn't want to go through the rigmarole of a listing option. What they did quietly, they merged themselves into ICICI Bank, and today ICICI Bank is what it is. So you'll find these dormant, unlisted companies suddenly, with no activity, 5 years inactivity, they'll just maintain SEBI regulations, they'll maintain stock market compliances, etc., and they'll just be live. Suddenly, you'll find one company wants to disperse its shareholding, it will immediately get into this reverse bid, where it will merge itself into this listed company, and that's what is called the reverse bid. So this is the concept of reverse bid. With this, I think more or less all the answers and sections are covered, and very happy to take some questions from our audience and students if they are there. Yeah. This integrated business studies course itself, in my view, the subject itself cannot be read like a student. I think you need to visualize yourself as a CA when you attempt this paper. That's what my experience about this whole course is. Yeah. Over to you, Deepak ji, if you got any comments or if you got any this thing, I'll be very happy to answer.
Students, if you have any technical query, you may ask.
Good evening, Deepak sir. Good evening, sir.
Good evening.
Yes.
My name is Kanhaiya, sir.
Yes.
Sir, I would like to ask a couple of questions. Like first for tomorrow's class, whether do we have any class for tomorrow? Because schedule has not been updated.
We are updating schedule. You will get update on the soon. You will get update within a few minutes, 5 or 10 minutes.
Okay. And my next question is like, sir, this is very vast subject. Like we have 4 questions to answer in the examination, and we have exactly 4 hours. And while reading the last question, JG Limited, it was around 10 pages. So, sir, is it possible for a student to attempt all the 4 questions in given a span of time and answering each and every area and thinking about all the things?
Can I reply, sir?
I think you should reply. You are the best person suitable to reply. Yeah.
Actually, this is a very comprehensive case study. We have given this because we want to give you more and more comprehensive case studies so that you can practice more and more.
Okay.
The purpose is only one, which is practice. That's why this case study is very comprehensive. Not only this, there are so many case studies in your case study digest are very, very comprehensive.
Actually,
So,
Deepak ji, actually, Kanaya, the best way for you don't look at it as a long this thing. My recommendation is that there are some 50 cases in this case digest, beautifully drafted, both of them. If you cover that, honestly speaking, in a day, if you can spend some time on it, you will actually get to your subjects in a very fast manner. Because you will have missing gaps in every subject, which you can actually fill up. Suddenly, you will find a new section in Companies Act. Suddenly, you will find a problem in GST, which you will be opening a Pandora's box for you. You will actually cover many, many things, and you will find at the end of reading this digest, you will find yourself very comprehensive and actually very thorough for other subjects also. That is my view, Correct me if I'm wrong, Deepakji. This is what I could gather.
You are right, sir.
Sir, one more thing, sir. Like before every class, if you could please share the case study which you are going to discuss. So beforehand, we will study those areas so that it would be easy for us to discuss the other areas.
Uh,
We have shared it actually. Yeah.
Kanaya, we have already uploaded the case studies on our portal.
But the thing is, sir, that really don't know which case study you are going to discuss. So
Both,
in the map, yes.
Only two is there. The other two I'm discussing.
both of these case studies we have already uploaded on our portal yesterday.
Okay, sir. So
There
from
is a
where we
specific there is a specific section regarding notes, assignment, and case studies where you can find. First, go
okay,
to on portal, go to IBS section. Then you will find a specific section for this. There you will find both of these case studies we have already uploaded.
okay, sir, got your point.
Hmm.
So I'll check every time before the class.
Yes, yes.
Okay, thank you, sir.
Welcome.
Radha's hand is raised. Yeah, Radha, please.
Yes, sir. So I'm very excited to ask you the queries. I have listened to each and every wordings of whatever you had said. So with regards to that, the very first query is with regards to board memo, sir. Like I didn't got that what kind of board memo you were talking about. Are you talking about the board of directors in the company?
Yes. It is
And
nothing. Yeah, absolutely. It's a board memo means it's a board presentation. You can use any word you want. Board presentation, or you can call it a board memo, or it's a presentation of the board. Yeah.
so, like, no, sir, you were talking about certain things under the board memo, like issue, background, evidence
Okay.
available. Then, what all things you were saying, I wasn't able to get it. So, can you
Okay,
please tell
madam.
me again?
Excellent. I will explain to you, ma. Very simple. We have the last thing that we discussed was physical verification inventory, right?
Yes.
Okay, now let us prepare a board memo for it. I will call it audit issue memorandum, board memo, whatever you can call it. First issue. What is the issue? Non-verification inventory. Okay. Second, implications. I am giving whatever I discussed, I'm giving. Okay, implications. Valuation is a challenge. I'm just giving broad English. You can write whichever English you want suitably. Valuation is a challenge. Existence is a challenge. Rights and obligations is a challenge. Banker could levy penalty on us. Covenants could be broken. These are the implications. Evidence is available. We have no physical verification papers available with us. Then implication from audit angle, potential disclaimer of opinion, from company's angle, poor governance, lack of controls. Stock market will not view it correctly if it's a listed company. Opinion will not, analysts will not look at the opinion correctly. These are the implications. Then board, action to the board. Please, you have to accept this opinion for the year and then take corrective action. This is how you prepare a very detailed. I'm just giving you the broad pointers, but this is how a detailed memo is prepared.
Correct, because that will also invite penalties in under SEBI.
Absolutely, absolutely. Implications, absolutely. Penalty, SEBI strictures, NEFRA investigation, everything.
Okay, that means every aspect needs to be taken care of
Absolutely.
by
Yes.
forming not even only audit memorandum, like under board memo, everything comes. Not at all
Absolutely.
just audit perspective.
Every aspect will come because the board has to be the board has to take a very comprehensive view. No? But particularly you are giving the independent directors. Some of them could be technical people who don't have accounting and finance knowledge.
Right, correct. So that's why a CS role is here, how to manage this all.
Very, absolutely. You're right, Radha. Very, very important role. That's why I told you this is the most exciting subject in final. Please take time to read all the case studies given by the institute, and you will find it exciting. You will learn so many things, and I can assure you, you will have a great start to your career. That I can tell.
Yes, sir. The another query was, sir, you were talking about a GST water distribution issue. So what was the verdict for it?
No, the verdict is the verdict is very clear that it is not going to be leviable because this is a public institution. which is doing the service. So it is not done with any profit motive. It is done with a great motive to help a certain section of industry. So it is not going to be levied. It's only a show cause notice, and legal precedences are there from other jurisdictions, and we will quote and come out of it.
Okay, like with regards to which state it was basically. I can read the
This
case
is
law.
this is not still coming out, so I will like to
Okay,
keep
sure. That's
the
personal.
confidential. Yes, I would like to keep it confidential.
Okay, no
Absolutely.
issue, sir. The next one is with regards to Namayatri, which you were talking about, that it is also causing disruptions in your area. But, sir, I would also like to tell about Bharat Taxi, which is totally a flop show, to be very frank. It's not able to disrupt the market accordingly. So, what's your take up on it?
No, I think you are right. I think that's a cooperative movement that's still not accepted, because it is like that. It is not able to disrupt because it is not bringing anything new. You have to
Correct.
bring something new to disrupt the market. That's what the wording we have
Yes,
to. What
sir.
is disruptive here? So, as I told you, VinFast, you please look at it. It is going to be disruptive,
That
because
means.
people will have a EV ride with AC,
Hmm.
and it is going to be very comfortable for us.
Okay, with regards to EV also, you said that you will focus on the backward integration with regards to lithium batteries. So why were you opposing it? Like, what is wrong in that?
No, I'm not opposing. We are only trying to make the no. We are no lithium battery. People are now working to extend the life, extend the replacement, and extend the charge, and extend the distance, so that it doesn't get back to earth filling. Earth filling is a big challenge, madam.
Yes, sir. Got it.
That is a point. That is a point. See,
Okay.
as a chartered accountant today, you are now more a business advisor. It starts, if you see, the IBS starts that you are a business advisor. You are not merely a chartered accountant.
Correct. So next one, with regards to Caber app case study, I would like to ask few queries. Sir, you were talking about the accounting for referral income. Now, what would be the accounting for that? I was not clear about it. And also, with regards to booking and convenience fee breakup was being provided for the Jaipur one, right? So,
Yeah.
what would be the accounting scenario? Can you please tell?
No, this would be a revenue for me. I just book it to the revenue side. This thing, booking income, debit, convenience charge. Both are credit to my income.
This the revenue recips, right? It will
Yeah,
go to
revenue.
P&L.
Revenue, revenue
Nothing much
receipts.
more. Yes. Okay.
Yes, revenue.
Um, Fine. The next one is, sir, you were talking about the startup growth stages. With regards to scale up, I wanted to know that how on the demand basis it will like, is there any demand on the scale up or is neutral?
No, demand. Scale up is complete demand, madam. Revenue growth is very fast.
Okay, revenue growth is fast. Then
Very
what?
fast. Cost is
Mhm.
in control.
Hmm.
Cost is in control. Revenue is growing very fast.
Okay. Then what about the incumbent, growth stage where Infosys example you gave? So, sir, were they giving a response at a response time was very low? That's why they, brought it.
Yes. See, what is happening? I'll tell you, the incumbent companies are very slow to react.
Okay.
Very, very slow to react. Startup, no. You have to work at a speed, jet speed, you have to work. There's no time for it to even think. And it
Correct.
is pivoting. In a startup, it keeps on pivoting. Every day, new pivot will come.
Fine.
Infosys, incumbent companies don't have that flexibility. There's no dexterity in them. The word is dexterity.
Dexterity. Yes, it's not no dexterity in them. That's why.
Yes, no dexterity. They are very slow. They are like Titanic ship. They cannot turn very fast the direction.
Correct, because they are already the giant companies.
Yes, yes, yes.
Yes,
That
huge.
is why you find AI disruption. Startups are adopting very fast. Large companies are struggling to adopt, because from a labor cost arbitrage model, they are now shifting to AI. They are finding the tectonic shift very difficult to handle, which is why stock market prices of all these companies has come down in the last 1 year.
Oh, okay. My God, this is very deep, sir.
Yeah, that's why I told you, this is completely, you have to look at it that way. That's the whole idea of this course presenting.
Yeah. Luckily, I'm asking you these queries. Next. Yes, sir. Next one, you were talking about certain hackathon and Zebra. Like, what is the worth valuation? I have never heard about it. Please tell me
No,
about
no, that is that is not the company. The Zebra is the name of a type of a startup. That's like unicorns also this thing.
it. Acha,
So
name of startup.
yes,
Zebra and
yes.
hackathon.
Yeah, Decagon and Centacon.
Centacon. Okay. Then, sir, just I wanted to ask you about MCQs which you were discussing, right? So you also said that there are certain elaborations to be made to explain the options which are negative options, you can say, which are not the correct option. So do we need it, like to explain those options?
No, not required. Not required. That I just explained to you to analyze how you look at the option. That's all. I analyzed it from a
Okay.
exam perspective for you. You don't have to explain that.
So only correct options needs to be
Absolutely correct
analyzed.
options should be given. On that I have no doubts. Deepak,
Sir,
please correct me. You are the authority on that. I hope I am right in my answer.
Sir, you are absolutely correct in explaining the queries, sir.
Very good. Fine. Thank you. I
okay.
just wanted, because it is better we have the deputy director also, so I wanted to be sure before we reply.
Sure, sir.
Thank you, sir.
The next one is with regards to independent directors, or like what were you trying to actually linking with it? I mean, I was not getting it. Which concept you were actually trying to say?
The number of directors in that example were 16, right? So I was just trying to link up to independent directors. How you, which concept, which case we were discussing? Cable caps, is it?
Sir, cable caps only. Yes. Cable
So,
caps, you were saying that there cannot be 3.5 directors. They need to be.
exactly. No, I was just giving an example to you that it is possible your query could be where they'll say independent directors, please compute. They'll say total number of directors are 10. And they will say, you please compute number of ideal number of, there are only 2 independent directors, please give an answer. I'm just giving a hypothetical question. So at that time, you have to say 4 independent directors because there cannot be 3.5. You have to have the board. I mean, one third of the total director should be, one third of the total should be independent director. That's my point.
Okay. Sir, one thing.
I'm only trying to give you permutations or combinations by which your thinking speed has to improve. That's the whole idea.
Correct. There are certain things, sir, which is actually clashing. So the another queries upon that, like you talked about key resources and the cable caps itself and the social impact. Sir, don't you think that they both are the one and the same thing? For example, the drivers and customers are getting the benefits in respect of that.
Absolutely. Yeah, they're the key resources. They are also getting social. Absolutely. See, it is possible that there could be, same answer could be fitting into 2 situations. It's not binary.
So what can be the distinction made? Because in the question specifically, it was being given to discuss the social and environmental impact. And also you said that to mention the key resources and the benefits and gains. So what can be the key distinction being made?
I think the key would be, social impact would be driver. Employment is a big impact.
Correct.
I would give employment as a very big impact. And then, of course, because of the maps, you are able to take different routes, reducing the pollution, etc. Could be a great answer.
So that's only the key resource as well as
Yeah,
the social
here
impact?
I would recommend you to, be little free in your answer, because at the end of the day, they are going to judge you for analytical skills.
Okay.
They are not judging you for right answer. There's no answer book here. They'll be given a model answer book for sure. That is not going to be a guide for them, because the examiner will use his discretion and see your approach and the positivity. That's how this paper is structured.
Yes, sir, because why I am asking this clear distinction is because, it's all, the certain concepts looks very integrated together, but you need to just, dissect it. So I was asking for the dissect part. Yes.
Absolutely. That's a point.
Yeah. So the next one with regards to is depreciation claim you were discussing, sir. So how revenue generation activity is to be quoted? That's what my query is. The assessing officer denied, right, to claim
Absolutely. No, very simple revenue generating. I get a commission. My cars are on the road. I got drivers. I pay them my salary. I get my net commission. That's my business income for.
Okay, so you are, that is a business income. Yes, that's why you said that, okay, we can, the assessing claim is wrong.
Absolutely. I'm not even bothered. I'm not an income tax guy. I can tell you straight away it will be allowed. Matter over.
Okay. The final few queries with regards to JZ Limited. Sir, what is a critical production line?
See, critical production line is one of the most important products that you produce, without which the market can suffer. No alternates are there. It is a proprietary product. These are all could be critical production line.
Yes, sir. But in the case study, as we wrote, we read, there was no specific backup option which was being specifically mentioned. So what about it?
No, it's not mentioned. That's why I'm telling you, you should probably be discussing all those things, little bit on the answer. if it
Okay,
comes.
so we should write that they should have a backup
Exactly.
option.
They should. That's exact. I was trying to give a little more elaborate scenario to you to how all these things could impact.
No, so can we give the practical example that, okay, as a backup option, they can do this, or the current
You can
company is
probably,
doing
yeah.
that?
If time permits, you can, but I would recommend that you should not. You should stick to the question asked. Yeah. This is
Uh,
only to enhance your knowledge and to, in case you find a similar situation, the idea is to help you with that. That's it.
Yeah, like for example, any specific current companies undergoing this kind of process. So can we quote their name or
Yeah,
it will?
absolutely. Absolutely. Public listed companies, if it's publicly available information, you can quote it. Why not?
Okay. So with regards to Office of Profit Analysis, what you were trying to actually say under Section 188 of Miss Sunita, related party transaction?
No, very simple. Are you getting anything over on top of the remuneration?
That
That's
is the
all.
only thing.
Absolutely. That's a concept. Over. Nothing. I'm not getting anything.
Okay.
Only my remuneration. That's all.
Sure. The next one is with regards to uncorrected misstatements. I wanted to ask. So you said that NAFRA is told about uncorrected misstatements. Is NAFRA specifically saying about uncorrected material misstatements or misstatements?
Uncorrected material misstatement. Yeah.
Okay.
Sir,
Yes.
there is announcement for students. Tomorrow morning is FR class,
Okay.
and
Yes.
sir, we are going short of time, and you can take one or two queries, and then we can wind up this session,
Sure,
sir.
no problem.
Yes. Last two queries only, sir. Yes.
Yes.
Okay.
Yes, sir.
Yes, sir.
Please, by all means. By all means.
Okay. The second last query is with regards to disclaimer of opinion, sir. How can you say that the specific Jay-Z didn't had the lack, like they had the lack of sufficient and appropriate evidence that was I was unable to make out.
Madam, management has not conducted physical evacuation inventory.
So that
First,
was the basis of
that was the basis. Second, you are appointed as auditors during the year.
okay.
So you don't know anything on opening balance. In fact, if you go to the Institute Auditing Standards, if you see the guide, they very clearly, the opening balance, you'll have to actually carve out and give a qualification.
Yeah, essay 501 we need.
Exactly. Essay 701, if you see the examples, very clearly it says, we were appointed as auditors subsequent to the year beginning, and accordingly we could not verify the last year opening stock. Last year closing we were not participating. So that is a disclaimer. That is a qualification you have to give.
Okay.
And you have no alternate methods of evidencing. What are the alternate? Management has not conducted. You could not do a roll forward. You could not do a roll back. You could not do a test check.
Correct.
So there's that's why this is claim.
Because of the last year's also was opening balances were also not at all verified.
Absolutely,
How can
absolutely.
we do that?
Absolutely.
And the very last one is about ICICI Prudential merger. Like, sir, what you were trying to depict it about that?
No, there's ICICI Bank and ICICI Limited. ICICI
Correct.
Limited was a unlisted giant
Yes.
with the public. It was a development financial institution. DFI it is called.
Yes.
This development financial institution got merged into ICICI Bank, which was a listed company, creating a fairly large bank. It's a reverse bid. That's why I said reverse merger.
Reverse merger. Okay. Thank you, sir. Thank you, Deepak, sir. And Deepak, sir, the question to you also. Sir, basically, see, with regards to IBS, whatever Ram Prasad sir has explained beautifully, but I would like to ask you that whether the point-wise answers should be written or the paragraph-wise should be written, how the answer writing skills should be.
Suppose if a question says to assess competitive environment, it means if you are going to assess competitive environment, you have to apply which model, which is Porter's 5 forces model. Okay.
Correct.
Okay. Now suppose this question is having worth of 12 marks. It means you have to write 5 points, divide 12 marks into 5 points. It means each point is having worth of 2.4 marks. It means in each point you have to write 2 or 3 points. You have to give 2 or 3 points to gain proper marks. Okay. They need proper points. You have to present in a manner so that opposite person can understand in a very well manner.
Okay. That means point-wise answers is appreciated rather than mere paragraph answers. You can say
At
that.
least you have to give some explanation along with paragraphs.
The points and to give them my own judgment in that, right, sir?
Yes, yes. Suppose in a scenario it has they have given you there are limited number of supplier. Okay,
Yes.
it means you have to write the in case of bargaining power of supplier, the bargaining power of supplier is very high because there are limited number of supplier.
Yes.
You will get mark for this point.
Okay. Fine. The keywords in short.
You have to apply the concept. If you are going to write simple theory direct from the module, you won't get any mark.
Okay. That means my professional judgment itself is coming into place along with the keywords.
Yes.
Okay, sir. Thank you. I got all the queries
Welcome.
resolved. Thank you so much.
Welcome. Now I am winding up this session, and on behalf of everyone present, I would like to express our sincere gratitude to CA Ramprasad sir for taking this special session on IBS. Your insightful presentation, practical examples, and valuable guidance have helped us gain
Thank you,
deeper
Rakana. Thank
understanding
you.
of the subject. We truly appreciate the time and effort you devoted to sharing your knowledge and experience with us, sir. A heartfelt thank you for all the participants for your presence and participation, which made this session engaging and successful. We look forward to learning from you again, sir, in future. And thank you, everyone, for joining with us today.
Thank you, Deepakji. It's always a pleasure to do some these sessions for our budding chartered accountants. I am grateful to the institute for the opportunity. Personally, to you, thank you so much. I look forward to such sessions. Thank you.
Welcome, sir.
Thank you.
Our
Bye.
session is over.
Bye.
Bye. Ankit ji.